Ladies and gentlemen, on behalf of Startup Disrupt, all our partners, sponsors, and of course the whole team and organizers, I would like to welcome you to European Finance Investment stage of Innovations United 2023 conference. My name is David Fogat and I will be your guide throughout the whole afternoon. So I hope we will have some fun while spending this time together. We are in this amazing historical space. You can almost feel the touch of the past. However, today won't be about the past. Today will be about the future. Future of finance, future of banking, future of investments. And as you can see, we have a pretty busy schedule ahead of us. We will have 3 welcome speeches, including this one, 7 keynote speeches, 4 panel discussions, 1 fireside chat, and most importantly, coffee break, but only 1. So that will be important. In total, we have around 25 speakers from 5 countries, United States included, so we are truly international event. That's great. And also we would like to interact with you, the audience. So we set up a Slido. Do you know Slido? The app? If you use the code EFIS, E-F-I-S, you can ask questions. And I will use these questions during the panel discussions. So if you want to ask our speakers anything, just write it down on Slido with code EFIS, E-F-I-S. Slido, it's S-L-I-D-O. You can open it in your browser, on mobile phone, or via mobile app. And I will do my best to include these questions during panel discussions. I also need to mention our sponsors, namely Allegro, started by ČSOB, Jimmy, Bliss, Goldilocks, as well as DLA Piper, Technology Incubation by Czech Invest, MSD, PRK, Tesco, EY, and Warehouse Number 1. Without our partners, such a massive 2-day event wouldn't be possible to organize. So, big round of applause to our sponsors and partners. I hope their representatives are here, so they can enjoy this applause. As I have mentioned before, our schedule is pretty tight, so I will be pretty strict on time. This goes mostly for the speakers, so if there are speakers in the audience, I already saw some of you, so I will be really strict on time. And now, without any further delay, I invite our first speaker, Jiří Valenta, Deputy Minister from Ministry of Finance. Jiří, where are you? Okay, great. Perfect. Jiří, here's microphone. The floor is yours, and you have 5 minutes, but only 5 minutes.
Thank you very much. I promise I'll be brief. Ladies and gentlemen, good afternoon and very warm welcome to you all to the city of Prague for the event Innovations United 2023. I think that the Prague is a city steeped in history and culture, but yet always looking forward. Much as the field, we are all passionate about finance and investment. My name is Jiří Valenta and I'm Deputy Finance Minister here at the Ministry of Finance, and I will touch upon a few topics during my welcoming speech. And as I promised, I will be very brief. You will explore through the summit a vast potential that innovations and startups have to offer. And in the past years, throughout the common experience of the COVID crisis and the consequences of the Russian aggression in Ukraine, it is evident that we need innovations literally to save our lives and safeguard our safety and prosperity. We need robust solutions, not only for the existing issues and challenges, but also for the challenges of tomorrow. We need the solutions in a broad range of topics, including the technologies regarding payment, investment strategies, blockchain, decentralized technologies, and we need synergies. Cooperation between the public and the private sector. The cooperation between the sector of the government and the private sector is vital for the nurturing our landscape, the landscape of innovation and the landscape of sustainable growth. As the representative of the public sector, I'm here to reaffirm you our commitment to fostering an environment that is supportive to growth, innovation and partnership. Our role is not just to regulate but to enable, not just to oversee but to uplift. We are dedicated to creating policies that encourage investment, ease the pathways for investors and provide startups with the support they need to scale up and succeed. Last year, the Czech Republic was a center stage of European policy. We presided over the European Council, and on the behalf of the all member states, we tirelessly worked to improve the common framework of the Capital Market Union. And we did not stop with the end of our presidency. We are still at the forefront of the European and national policy, because we know that the startup environment is true testament to the power of innovation. Each startup is a beacon of potential, possibilities that can transform our societies and economy in a profound ways. Throughout this summit, the knowledge and experiences will be shared among the participants, the ideas that will help us to chart a course through the complexities of finance and investment. And I'm sure that we will build bridges between vision and action, dreamers and doers. We stand together at the forefront of a new age, an age where the collaboration is a key. As we embark on the summit, let us remember that we are not just navigating the financial ecosphere, we are shaping it. With every decision, every partnership, and every investment, we are crafting the narrative of the future. And what a powerful narrative it can be when it is written together. So let us proceed with an anticipation and a collaborative spirit. And I wish you all a very productive and inspiring summit. Thank you very much for your attention.
Thank you. Thank you very much. A very important thing, I need this microphone back, so don't leave with it, okay? I invite our next speaker, David Miller, Director General of European Union and Trade Section from Ministry of Industry and Trade. David, the floor is yours. Here's the microphone, and you have 5 minutes.
Thank you very much, ladies and gentlemen. Good afternoon. I'm a little bit surprised by the picture because during the last event with Startup Disrupt, I made a note about Startup Disrupt presenting my picture, which was about 5 years old. This is about 10 years old, so we'll need to have that conversation again. Anyway, I appreciate the opportunity to be here, and I would like to thank Startup Disrupt for invitation, not for the picture. I came here from the meeting I had at the ministry with the American delegation, and one of the topics we discussed was what we can do together in terms of helping Czech startups being more successful in the US, and how we can attract more American startups and businesses to the Czech Republic. That's basically what we do at our part of the ministry, which is in charge of foreign trade and international partnerships. I guess I won't need those 5 minutes because I would like to deliver just a few simple messages. I know that I'm representative of government, and sometimes the world of government could be seen as distant and remote from the perspective of startups and businesses. But from our perspective, we've been trying to do our best to help you succeed globally. So that's the first message. What we do at the ministry is to facilitate Czech businesses and Czech companies with global outreach, and of course small and medium enterprises and startups are one of the priorities of the ministry and of the minister himself. We made startups as one of the future key partners and gave them important role in the new export strategy of the Czech Republic, which defines our goals towards helping startups to make it global, to help them to make global outreach, to help them make global partnerships, to become national champions and pioneers. We've got quite a few tools to in that regard, and I'll be more than happy to later discuss with you or anyone else who might be interested how we can help. But I would like to briefly mention just 3 of them. First, we've got a trade promotion agency, Czech Trade, with offices in more than 50 countries around the globe, including a few offices in United States. Those offices and our representatives overseas can certainly help you. Should you be interested in finding more information about foreign markets, competitors, regulations, any type of information, partnership or connection which you might be interested in. That's one thing I wanted to mention. The other thing, skilled workforce. We are aware of the fact that many Czech businesses, not only small and medium enterprises or startups, but large companies as well, have been facing the issues of importing workforce, skilled workforce, or finding skilled workforce in Czech Republic, or importing them from other countries beyond the European Union borders. The message is that we run together with Czech Invest a couple of programs designed to help to import skilled workforce, specialists, technicians, highly educated people you may need to pursue your businesses. And we are aware of the difficulties of bringing those people to the Czech Republic, sometimes of course. In that case, we are ready to help, to provide guidance, to provide assistance, to facilitate the process. Last thing worth mentioning, our minister has been traveling overseas a lot, and of course he's been almost always accompanied by a business mission. He led business mission to the United States earlier this year in March, and he was accompanied about 25, 30 representatives of startups, including the group recruited with the assistance of startup this round. That's something we really appreciate. From our perspective, the mission and the connections made this year was so successful that our minister agreed to lead a mission to the United States next year at the end of April again, and that mission should be solely focused on startups and Czech startup promotion in the US. And we plan to visit Boston, Chicago, and Seattle. So whoever might be interested, feel free to get in touch with me or members of my team or Patrik later. And I guess that was more than enough. I will stop right here, and having said that, I would like to wish you a great event and great conversations. Thank you.
Thank you very much. That was David Miller from Ministry of Trade. And now, after 3 welcome speeches, I hope that you feel welcome. And we are moving on to our first keynote speech, Marek Vitz from Partners Bank, CEO. Okay, here we go. So, here's the microphone, and here is the thing, and you have 10 minutes.
Yes. So, good afternoon, ladies and gentlemen. It's my pleasure, and I'm honored to welcome you here to the conference as a representative and on behalf of probably one of the largest startups which is happening in Czech Republic now. As it was said, this is venue for dreamers, so I must say I'm representing here the dreamers because my dream came true. and we were awarded the banking license in late August this year, and we are starting the banking operation in the first quarter of 2024. All year we love innovation, and innovation is driven by the progress, and the progress is driven and brings the customers certain new features. Above all, it brings the transparency. In the past, the clients had to spend tremendous effort to search for data, to search for information, to execute their financial life, I would say. Today, the technology brings them search, brings them information from all over the world. You can even find out how much money your supplier makes on you, because mostly this information is public. The other is speed. So the innovation and the technology brings speed. Today, everyone wants the access to the information and wants to execute the financial life, buy financial contracts, pay instantly. So people want to enjoy the technology. And there is also the flip side, on the other hand, of the technology, and this is complexity. The access to tremendous amount of information, the abundance of information, and the speed with which you are consuming it creates maybe confusion, but in always the complexity. So from time to time you need someone who will guide you through this complexity. It could be human, it could be artificial intelligence, but you really need someone, because to process this amount of data and I would say impulses which are coming from the information to you is very difficult for a human being. And that's why we say we wanted to combine the banking world, which is basically in ideal time reflected in a way that it's safe, and the customer wants from the bank that it's safe, that it's speedy, so it's fast, that it's low cost. It's intention of the customer, it's not the fact, yeah? But it's low cost, and it has instant data. If you want to bank today, you have to combine all these requirements of the customer. If you fail on one of them, you are out of business. And we combine it with a financial advisory, which is a completely different world. Our group started with 2,000 financial advisors who are independent, who are selling the products from the market, basically. And we say, we apply for the banking license, and we create the first advisory bank, which will combine the individualism, the goal focus of an advisor, with the speed, reliability, low cost, and instant data of banking. This is kind of challenge, of course. And the advantage which we would like to generate is that we allow ourselves to be really dedicated to a customer, that we take from the advisory world the focus on individual, not you don't feel with your financial advisor as a part of segment. You feel as an individual, because the substance of advisory is to discuss your goals, to give you the choice from various products in the market, and to focus on growth your wealth, and definitely it's human. We think that in the center of our focus is not, however, the individual per se, but it's a family. The unit of a financial advisory, the unit of the financial thinking, with each of you is actually the family. It could be, in extreme case, the one-member family, but in many cases, it's not only your wife or children. You might not have a wife, you might not have a children, but you have mom, for example, and also Mama Hotel is a family in this way. And the planning, the financial planning, is not done individually. So this is a key feature of our approach. On the technology side, we focus solely on phone. We completely forget about internet. In finance, we think the internet is not secure place enough for your money, for whatever reasons. So we focus on phone, and we think this little stuff like a phone maybe will be replaced in the future with something. But for the time being, this is the best place for your finance. The native app in the phone. And of course, we focus on human, but not human like everyone. We focus on educated human, the financial advisor who has to pass the hurdle of exercising the hurdle of education. So it's not a job for everyone in our world. And we think that with the combination of all these features, we can build a superior customer experience for our new and existing customers. A bit of the flavor of the project, just to know, give you the sense how it's done in Czech Republic if you would start the bank. It took us 975 days working, not waiting, but working, intensive working for licensing with the regulator. On the development side of the project, it cost us so far 69,000 of man days. And as I said, we start next quarter of next year, so it will cost us another 3,000 a month. The ratio of IT to non-IT personnel in the project, which is, by the way, today around 180 persons, is 3 to 1. So we have 3 IT people to 1 business person. That's a bank today. And the initial capital, which the regulator required, was, it's easy to remember, 1 to 3. It's 123 million euro, which is a result of a stress testing for 5 years. So they took the worst stresses you can imagine of for 5 years, and that's the capital you have to have at the start. So I was thinking, somehow, if we do nothing as a management for 5 years, we have no clients, and we still have the full headcount for 5 years, still we can survive 5 years, which is of course nonsense. We would do a lot, and our owners will not allow us to sit. But that's the expectation of the regulator. Whatever happens to you, even the worst scenario, you must be prepared for your capital. And we work with support of more than 55 suppliers. Some of them, of course, global. We are the first Czech bank which got a license to be 100% in cloud. None of the banks here is allowed yet, except for us, to be 100% in cloud. None of the banks applied even for it, except for us. And we are 100% only mobile and passwordless. So we already implemented a passwordless approach to authentication and authorization in your app. So, to conclude with, you love the innovation, you love progress, that's all fine. So I wish you get a lot of courage, of course, which you already have been here. Otherwise you would not deal with the innovation. I wish you also to learn something here and from your project, because learning means that you are failing. You must fail. We also failed on many occasions, and if you have a, how to say it, fuck up night here, I can really also stand there and tell you something how we learned. But important is that we didn't repeat it. So we learned from it. And the most important thing is you should have no fear. And I think I have some problem here with the... Yes. So the major point which is hidden here is for those who are from transformation of large institutions. It was probably censored, because I had the advice when I was doing the transformation of large institution. It's much more difficult than startup actually, because you have to fight the cannibal inside of the institution. So I was wishing you no fear of cannibals, of course, sitting inside of your institutions, which are real enemies of the progress and real enemies of the new future. And yeah, thank you for your conference, for your attention. Enjoy this conference, and there will be panel when our head of front end of the application, Daniel Zeman, is attending, so you can ask him some questions and he will answer. Thank you very much.
Thank you. That was Marek Dic, CEO of New Bank, Partners Bank. And we are moving on to our next keynote speaker, who is... No, we are moving on with a panel discussion. We are going to have a first panel discussion. The topic is World Economic Outlook 2024 Recovery. And I would like to invite Michal Májek, CIO of Tatra Asset Management, Tomáš Oleksa, Head of Financial Innovations at Czech National Bank, Katarína Kakalíková, Director Government Engagement at MasterCard, Petr Bartoň, Chief Economist of Natland Investment Group, and Bára Greplova, Institutional Regulations at INADBA. Okay. Yeah. Perfect. Leave one chair for me, please. I hope we have enough. I will put the second mic in here. You can drink water, it's for you, so use it. And we are going to have... Okay, this is the right slide. Perfect. And again, if you want to ask anything, or, well, related to the topic, would be best, you can use Slido. The code is EFIS, E-F-I-S. Okay, so, welcome everyone. Thank you for your attendance. And we can start our first panel discussion. As I mentioned, the topic is about recovery of the economy, which is kind of optimistic standpoint. So my first question is, will there be any recovery? What is the prognosis from your point of view? So we can start maybe from this end.
Hello. Yes. So first of all, thank you so much for having me here for this panel discussion and this event.
Sorry, we need a counter. 40 minutes, please. 40, yes, thank you.
So I represent an association of trusted blockchain applications, so maybe I can comment on that from the point of view of distributed ledger technologies, and my colleagues can comment from basically their point of view. I believe 2024 will be a very crucial year for us, not only in Europe, but globally. We will have a US elections, we will have a new elections in the European Parliament, we will have a new EU Commission. We are expecting elections in a number of other countries. So next year we will actually start a new 5-year cycle, which will be very crucial for the domain where I am, that is the blockchain technologies. I have to say, I don't feel there needs to be necessarily a recovery, because from blockchain point of view, even though we have been through a crypto winter, several crypto winters, there's been tremendous developments being done in the background. We actually have not decreased in terms of developers, innovators, creative ideas. We are actually crystallizing ideas and projects that are worth being put into reality, let's say. So from my point of view, I'm very hopeful about 2024 and going forward.
Perfect. Thank you very much. What is the economist's point of view?
Ladies first, no?
No?
Okay. Depends on, well, of course, depends on which economist you ask, but mostly it depends on what part of the economy you're looking at. Let's take 3 main ones that we're suffering from. Energy, yes, we will recover from the nightmare which was last year. This year has been already much better, and next year should be better still, unless this whole thing in the Middle East blows up even more. But in that case, we'll have completely new set of troubles compared to which the energy is going to be just a footnote. So that recovery, yes. In terms of high cost of capital, meaning high interest rates, yes, some recovery, especially in the Czech Republic. I'd say most economists, but let's say half and half, or a bigger half of the economists expected the Czech central bank to start lowering the interest rate already last week. It didn't. It's doubtful whether they're going to do it, therefore, before Christmas, because their next sitting is like 2 days before the weekend of the Christmas weekend, and I doubt whether they will want to do it at the last minute. They might want to wait until they see the January numbers, but then very, very early on next year we should start first dropping of the interest rate. As for the Eurozone and potential also the US, maybe they will stick to higher interest rates slightly longer. So there, the real start of cheapening of capital might be more in the second half of the next year. But if you're asking about 2024, that still counts as 2024. So yes. So two recoveries so far. And now for the biggest question, what about the whole economy? I'm very skeptical. So far, every single new number that has been coming forward in the last couple of months has been only towards worsening, not just about the Czech economy, but also about the Eurozone economy, mostly dragged down by its largest component, namely Germany. So every single forecast has been degraded by a half. So far, they're mostly hoping for the so-called Schwarze Null, meaning just above zero growth, but that might deteriorate as well. So probably not very good recovery, at least in the European market or in the European economic area. Slightly better prospects perhaps for the US. Not, however, because of the extraordinarily large numbers of economic growth in the summer. That is not to be repeated, and that is to a large extent attributable, and there are data to back it up. This is not just a story. The large jump in US fortunes over the summer has been greatly attributed to the double blockbuster of Barbie and Oppenheimer.
Thank you, great. Okay, moving on. So what does MasterCard thinks about 2024 and what is ahead of us?
Well, I can only confirm that the economic growth or the recovery, at least for the surrounding countries, when I talk about Czech Republic, Germany, and for example Austria, the countries that are quite driven by manufacturing industries, will probably not recover in a positive, in the way that we would like to see. We are seeing, at least from our point of view, we are seeing a little better, stronger recovery in the countries that are more driven by services industries. We can see that, of course, in the spends that we've seen. Czech Republic particularly is one of the countries that has not recovered since the pandemic, which we have seen in other countries compared to even the surrounding countries, such as Poland being a country that is actually growing relatively fast, at least compared to other surrounding countries. When we talk about the trends that we are seeing, is that I don't think that much will change in 2024. I would hope so, but I guess it depends more on the already manufacturing cycle that I mentioned. I think that unless the surrounding countries, and especially Czech Republic and Germany, invest significant funds in digital transformation either of the country or of the public services, but also of the economy, and specifically also micro and small businesses. I don't think there will be strong recovery, not from our point of view right now, from what we've seen.
Well, that was kind of negative, but we need this opinion as well, because, things really doesn't look that great and optimistical. So, another opinion?
Okay, for me, I'm from Czech National Bank, but I am no economist, so I can only say that when the colleagues come up with a new prediction, it's always 6 months, 12 months is going to be worse, and then it's going to be better. So I don't know, but from perspective of innovations, that the agenda that I'm dealing with on every day, we have lots of uncertainties, especially with the new legislation. You have for crypto assets, you have DORA, which is operational resilience for the whole market, for the financial market, and we have new regulation that come in the pipeline, like it's open banking and regulation of artificial intelligence. So I think 2024 will be very different, not very different, but from the perspective of, how many participants has to comply with all different rules, it's going to take a toll on the economy.
Thank you very much. And what is Slovak point of view when it comes to next year?
Okay, thank you very much. One thing to start with, one advice to start with, never listen to any economic forecasts for the next year. Usually they are wrong. The track record of any economic forecast for the next year is so low that you can flip your coin and you get probably the same result. The reason is quite simple. Economics and the world economy is such a complicated mechanism. It's a lively mechanism of millions of people interacting with each other. It's absolutely impossible to predict the way they will interact over the next couple of months or over the next course of the next year. So from my point of view, what is more important is to look at what is happening at the moment or what has happened in the recent period, and then try to extrapolate to the future. And what we saw over the last 2 years were seismic changes in the world economy and also in the world as we are living. The first is that the interest rates have gone up like significantly. We have seen increases by 500 basis points in the US or Europe over the course of more than 1 year, which is naturally impacting the whole economy, and it will also impact the consumer behavior, the company behavior going forward. That's one very important change compared to the last years that we saw, and we have to take this into account when we are predicting anything into the future. And the second is the geopolitics. This factor has not been very significant over the last couple of decades, but over the last 2 years, naturally, everything changed. Just looking at the statistics, I just look at it, and last year was the year with the most casualties in armed conflicts worldwide over the last 5 decades. It's just incredible, and it's uncomparable to the previous decades. So something is changing, and we can feel it, whether it's Ukraine, whether it's the conflicts in Africa, whether it's the Middle East or the Near East over the last months. We are seeing changes in geopolitics and changes in the you can say the way the world is settled from some kind of unipolar settlement into multipolar settlement, and that is changing actually also the way the economy is behaving. China changing from cooperating to antagonistic and things like this. So these are many things that will naturally influence the future, and I think that these changes that we saw the last 2 years will have, I don't want to sound pessimistic, but not really positive contributions to the world economy over the next year.
Well, you are not alone. So, as we have already heard from other speakers, it is true that especially the last 3 years, were full of kind of unusual events that had a significant impact on world economy. 2020, 2021, 2 years of COVID, then 2022, which was supposed to be the year of recovery. However, Russians didn't think so. So they attacked Ukraine, and now we had an energy crisis, massive inflation, interest rates also going up, and this year another conflict arose in the Middle East. So the world seems to be not such a happy place right now, and some politologists say and claim that actually we are at the beginning of Third World War, because all the boxes are ticked actually. So maybe, well, they will be huge. Do you expect any other of these kind of unusual big events, maybe some black swans, to happen in the next year? Do you think of anything? You can be creative.
Is that a trick question? Because black swans are by definition unpredictable. So I'm not going to be caught out on that. But I'm not sure whether there's anything on the horizon that has even some potential likelihood to be a grey swan, if not a black swan, if you will. But having seen the skepticism, let me play the devil's advocate and bring some maybe positive news about the recovery, about the economy. The problem with this year and last year, at least as long as we measure it by the GDP per capita or whatever, has been that there was actual growth, and many of your companies probably will have seen growth in sales. Growth in sales in these figures and how much revenue you gather has been growing all across the economy. The only problem is that once we count the GDP, we have to subtract inflation. So economies have been growing in some sense in terms of the output, except the subtraction of inflation has been sufficient to wipe off that growth. Now, if that growth continues and maybe even increases, and next year, by all accounts, we will have less inflation to subtract from that, then automatically we will see much positive numbers, much more likelihood of positive numbers for GDP. So we have to be careful what exactly the GDP measures. It's not that economies are not growing, they are, but because formally we are subtracting, and sometimes it is fair to subtract inflation, sometimes not. For many of your companies, you are maybe in sectors which haven't been so much faced with the actual inflation as it's counted by consumer prices. Maybe for some of you, it's unfair to subtract that, and then your companies will be able to see some real growth just as they have been this year. So partly the problems of, what I'm saying is that to have zero growth because the economy is not growing is a different beast than when the economy is growing, but at a cost of inflation which is then subtracted, right? So 0 minus 0 is different than 5 minus 5. That's all I'm saying.
Okay, thank you. Another point of view?
Coming back to your question regarding where the important event may come from, we always have to look at the usual suspects, like we can call them. These are the most important sectors in the economy or areas in the economy, which are usually banks, real estate. So you have to look at those sectors in the economy, and if there are any problems breeding somewhere, usually they will pop up in one of those two sectors that will usually impact the economy. Because naturally there are many sectors, many segments of the economy that may go wrong or something bad may happen in those sectors, but they will not influence the whole economy or impact the whole economy in such a way as those two sectors naturally. If anything, as was the last crisis and the previous crisis before, usually there is some bank involved or something, some banking industry involved, and nowadays the new problems or the new, reasons for worry may come from real estate sector as well.
Thank you. Especially when we look at China, especially real estate in China is in a big trouble. A lot of Chinese companies, partially or wholly state-owned, are in a big trouble. And also, when we are mentioning China, we should also mention China and Taiwan situation, because a lot of experts are anticipating that China will attack. Can we calculate the impact of such an event on the world economy? Because UN will act, of course, and it will impact the global logistic structure and the global trade. Tough question.
Just a brief answer. I recently heard a good argument from some experts on geopolitics, which I'm not definitely. So I'll just tell you what they were saying, and I think it made a lot of sense. First of all, is that the probability of China attacking Taiwan at the moment is still very low, due to various reasons. Some of them, the difficulties of attacking an island, naturally, which these difficulties are huge. There are only some periods of time when you actually can cross the straits between the Chinese mainland and Taiwan, and in that time you have to make these invasions. So it's very difficult actually to make this. So what they are saying is that probabilities of such an event are naturally still very low. Everybody's talking about this. Naturally, China is, showing strong muscles in this area, but in general, it's something which is very difficult to undertake, and the probability is still very low. But the impact of such an event happening would naturally have huge consequences of world economy. I'm not mentioning the fact that Taiwan is a very important supplier of semiconductors, which our economy just needs, and we cannot function without semiconductors. And all the alternatives at the moment are still not enough, and that would naturally create the problems in the first place. Not to mention the fact that there is some implicit guarantee of Taiwanese security by the US, which will, in a certain way, raise the question whether the US will be pulled into a conflict with China. So, for me, as I mentioned, the probabilities of such an event are very low, but that's what you mentioned. These are the black swans. The probabilities of them happening are very low, but when they happen, they have significant and huge impact on the world economy.
Well, if nobody else, I don't want to hog the space, but precisely for the reason that it would have such a large economic consequences, especially through the semiconductor business, which is so much dependent on it, as we've seen. I mean, we could be producing Skoda cars all we want, but if there is one chip missing, it's not going to be put on the market, and therefore you haven't produced any cars, even though you have produced 99.9% of a lot of cars. And for that reason, China is not going to invade because ultimately it would destroy China, because China is still dependent on exporting stuff to the rest of the world. And if the rest of the world doesn't have chips, it's not going to want the rest of the stuff from China, and therefore it would completely kick it out of any hope for recovery. What we should fear from China is not that they're going to invade Taiwan or anybody else. What we should fear from China is that they're not having enough sex. Chinese population is shrinking, and up till 7 years ago they had the one-child policy. Then they increased it to 2-children policy, and now for the last 1.5 years they've had 3-children policy. People are encouraged to have up to 3 children, and yet they are now having half the amount of children than they had under the one-child policy 7 years ago. There's last year, numbers have just recently come out, 1.09 children per childbearing age mother, which is basically below half of the recovery rate. So it will have a huge problem, not necessarily next year, but down the line, because economies have not been great at dealing with shrinking populations, especially when they're not ready to replenish them through imports of people, through immigration. So the biggest threat let's say in 10, 15 years down the line is the Chinese pension system, or old people going into retirement, because the Czech unreformed pension system might be a problem for the Czech economy. Chinese pension system, unreformed, is not a problem for Chinese economy, it's a problem for world economy.
Thank you very much. Now moving on to maybe more positive side, since we are at the Finance and Investment Summit, members of the audience maybe expect some investment advice and tips. So which sectors do you expect to recover maybe more quickly, or have the best predispositions to recover and grow in the next year, and therefore they will be great to invest in?
Maybe I could add a little bit to that. Maybe not give an investment advice. I'm not really allowed to do that. But what we are seeing is that indeed we've seen that actually since the pandemic already, that there has been a strong push of spend on what we call experiences. People actually, I don't know whether they realized, locked up for a long time, and they didn't want to spend so much money on things, but rather preferring experiences. This is a trend that has been continuous since the pandemic, actually, that we've been, we can see that continuously on data across the world. So I believe that, anything that has to do with experiences is quite interesting. We are expecting the spend to continue to grow despite the latest inflation rates, etc. Now, with the inflation rate going down, with the investment, with the cost of capital going a little bit down, I think we'll be seeing a little bit, maybe more shift toward also people purchasing goods. However, the experiences is something that will be continuing, and that is, tourism industry is something that we've seen growing significantly since COVID. We can see also anything that comes with experiences, so like the traveling, either lodgings or restaurants, etc. Like all of these kind of sectors have recovered pretty nicely. In some countries stronger than the others, but this is something that I think the trend will continue as people go ahead, and probably also with such important events as we have seen last year and this year on the geopolitical side. I think people probably even have that kind of tendency to continue to experience, to have really unique experiences across the world.
So basically, you are saying that Slevomat is going to have a great year. Okay.
Maybe just a comment from my side. I definitely cannot give investment advice, but we work a lot with members from the industry, private sector, and with members of the public sector. And one of the key topics and projects governments are interested in collaborating with the industry deal with digital identity, digital credentials, and empowering citizens through digital identity and projects related to that. So this is definitely a space where we see there is a lot of attention from public sector, supranational organizations. And then it's definitely real estate and decentralized real estate and financing of that. So that's just my view of the question.
Right, thank you.
Maybe my small tip is, I think it's crypto industry, but the problem is that the crypto industry in 2 years or 3 years will look very differently than it's looking now.
If I may add one more, actually, and was mentioned probably already at the beginning at some point, is that cybersecurity, obviously, with the growing digitalization, also with the geopolitical problems, and we know that security is high on the agenda. So investment into companies that deal with cyber, I would guess that could be pretty safe investment.
I think MasterCard has a great view of the future. They know us very well. They know what we're spending on, and therefore they can take those projections into the future. So yes, I completely agree. I would even strengthen it. I think in 30, 40 years' time, i.e. within lifetimes of pretty much everybody in the room, we will be so rich that at least in the advanced economies, 80, 90, even up to 90% of the economy will be about services, not about manufacturing. It's going to be robots, which are going to be manufacturing pretty much anything. And then the robots will be there where the best conditions are, i.e. the cheapest energy. Iceland has a great future because it's one of the few countries which basically has zero cost energy. After we will dematerialize our lives, and even MasterCard probably will be just virtual, will be no longer a physical card, yes, it'll be all services, massages, foot rubs, and travel, and all that. And those will be labor-intensive technologies and labor-intensive sectors, which will solve the eternal question, the robots are stealing our jobs. What will we humans do when everything will be produced by robots? Well, we'll do things to each other. Nice things, hopefully. And as far as we can see, people will always prefer to be massaged by another human than by a robot. It's going to be little old ladies in Japanese old pensions homes, who already are being serviced by those robots because people are too expensive to take care of them given how much money there is in the old social care. So those will be odd ones out in our old age, and this will be part of it in 30, 40 years' time. Again, it will be much older generations. So yes, those services, human services, for our old age will probably be done in the cheaper way through robots. But during our peak productive years, we will want to be served by other humans. So it's all going to be services. With a small window until then, in the next 10 years, at least in Europe, all economies will be about energy, transformation of energy. That will need a lot of steel, a lot of aluminium, a lot of material things. Somebody will need to build it, so there's going to be a lot of old age investment into physical things as we revamp the whole energy situation. But be careful, that's only a, let's say, medium-term investment strategy, because after we will have revamped it, and there's always the black swan that we're waiting for until somebody discovers a better battery. Once we have a better battery system, then we will have solved our at least immediate energy needs, and the whole economy is going to look completely different.
Thank you very much. Anything else to add?
Regarding giving investment tips, I'm really awful at giving tips.
Of course, a huge legal disclaimer. These are not investment advices.
And I never invest based on what I think that will be in the future the hot topic. But I would like to focus on two areas. One was already mentioned. I really like the idea about energy transformation. I think this will be a huge topic in Europe. Because Europe was always reliant on cheap Russian energy, and suddenly, from one moment to the other, we realized that we cannot do this anymore, and a huge transformation of the whole economy to other sources of energy has come, and not only to other sources of energy, but also on higher efficiency. So I think this will be a huge topic for the next couple of years. If you can innovate, if you can bring higher efficiency, how to use the energy that is available in the manufacturing, in the processes that you have. This is a game changer for any industry. We already seen it in the last 2 years in Germany, in other countries, that there have been more efficient use of energy in the economy, and also that's one of the reasons why the impact of the high energy prices was not that significant as was feared when Russia invaded Ukraine. So energy transformation and energy efficiency, I think, will be huge topics. And because I'm an investment guy and always follow what's going on in the markets, so huge topic naturally is AI at the moment. And not just AI, because AI is such a cheesy word you can say at the moment, but how you can generate additional revenues when you are using AI and when you are improving your processes and your working of your company, incorporating AI. So this is what the markets have been focusing really much in the recent months, and I think companies that will be better at incorporating AI and able to generate additional revenues via this new tool will be the companies that will perform very well in the stock markets.
Thank you very much. So you heard it, ladies and gentlemen. Experiences, services, blockchain, crypto, AI, robotics, and energy sector. Now I will check Slido because I want to give you an opportunity to ask. I still have some questions left, but well, let's see what you have asked our speakers. Oh, 2 questions. Nice. Okay, so the first one. What about by Anonymous? So this shadowy group is asking something. Anonymous. Okay. What about stock markets? Will they grow or fall? Will there be regional differences? Like US growing, EU stagnant, emerging markets falling? So pretty specific question related to investing.
I think the emerging markets will continue to emerge, and therefore they should improve as more and more of precisely the manufacturing burden goes on them. as a stock market, as a vehicle itself, I think, well, number one, because of the higher interest rates, it will stop having that relative boost that it had in increasing asset prices that it's seen, at least since the financial storm. Certainly the zero interest rates by central banks have helped investors to channel all their free funds onto the stock market, so they cannot count with that little artificial boost. And I think with the increased variance, stock markets are very good at processing standardized information about companies. So if you have manufacturing companies, you have standardized bookkeeping, and you can easily cross-compare company to company. In the new world, where companies and their scope of what they do increasingly differing from each other, stock market becomes less and less efficient way of processing information about those companies, and vehicles like private equity, which have specific expertise in how to read the accounting books of the target companies, could come to fore, and they might have an advantage in reading the financial information compared to the mass processing unit, which is the stock market.
Thank you very much.
Just that you just cannot predict anything that happens in the stock market within 1 year. Like you can look at it statistically. There's like impossible to make any prediction, but you can make a prediction with, you can say, a certain degree of probability how stock markets will perform over 10 years, over the next decade. And what I think we can say is that we have to lower the expectations for returns coming from the stock markets over the next decade compared to the last decade. The last decade was hugely successful for stock markets, especially driven by the US markets, which performed like the best asset class in the world over the last decade, which is huge because it's the most liquid, biggest, and the most important market in the world. It was the leader. Over the next decade, the probability of US market delivering the same level of returns is quite low. And taking into account that US markets comprise around 60% of global equity markets, I think we can easily say that the expectation for equity returns over the next decade should be lower. We can say even significantly lower than the last decade. I'm not pessimistic in this. I'm not saying that you should not invest in equity markets, but just lowering the expectation is a good thing to do.
Thank you very much. So I hope that was sufficient. And we still have some time for the last question. We already briefly mentioned it because it's about crypto and blockchain. Will we see significant breakthrough in 2024? So I suppose a lot of people is expecting or hoping that there will be some rapid changes on the crypto market. So what are your expectations?
I think possibly, and I already explained that 2024 will be very significant, and depending on the results of various elections and various public sector developments, we will also see how the blockchain and distributed ledger technologies ecosystem will react. It's very volatile, or can be very volatile ecosystem, especially when we talk about crypto. And it reacts to so many things in the world, in the society. But I truly believe we can be hopeful. I'm very optimistic in this space, so I think we can see definitely some new interesting developments there.
Thank you very much.
Well, it will depend how it will go through the gate in Europe, because they will have to be licensed, the crypto exchanges and the issuers of crypto assets. So this is the biggest uncertainty, how good the players, the current players are prepared for the regulation. The same problem they going to face is in US, and other countries will do it probably the same. So in 2-3 years we'll have the same regulation like for banks or for the investment companies. So after that, how they will respond and how they will be prepared for this, I think the biggest advantage, at least from the European perspective, is the current banks, the current financial institutions, because they have an easier way to get to get license to do this. So I think if you have less players in the whole market, then you will have, the revenues will go to less companies and they will have more profits, probably.
Thank you very much. We are almost at the end of the panel. So for the final remarks of this panel, I would like to ask you a simple question. If you had to choose one word to describe the next year, what would it be? Just one word. So start when you are ready, whoever is ready.
I don't know if somebody will want to take up my one, but I have the advantage of going first. The word will be same.
Nice. Anybody else?
I wanted to say unpredictable, right? We've heard that several times.
That's very, very likely to be this case.
I would say symphony, and I need to explain that obviously, because I believe we will need to focus on symphony of technologies and technologies working together, innovation working together in order to help with recovery, help with progress. So it's not about single technology such as blockchain or just AI or just digital twinning. It's about symphony of technologies.
Wow, very nice. That's a very deep thought, so thank you for that.
From my perspective, automation.
Thank you. And the last one?
I will use the word Trump. Not just.
Oh no.
Not just because there are elections next year, but sometimes that also the year may be quite similar to that personality. I think you never know what to expect. You never know what will come out of that, and the whole unpredictability of the whole year. Going to that year right now, I think is best summarized by the word.
Thank you very much, and that concludes our first discussion panel. I thank all the speakers, namely Bára Greplová, Petr Bartoň, Katarína Kakalíková, Tomáš Oleksa, and Michal Májek for attending and their very nice thoughts and remarks regarding the situation that the world will be in for the next year. So thank you very much. Moving on with our tight schedule, I need to check what is happening next because I don't remember. Okay, so keynote speech, reinventing the wheel, building a digital banking platform from scratch. Therefore, I invite Mia Van, blockchain and digital assets lead. From MasterCard. Is she here? Oh, there you are. Come on, don't worry. I don't bite, usually. So, this is your mic, and you also have a presentation, so you can move the slides with this, and you have 10 minutes. 10 minutes, please.
Thanks very much. So my name is Mia Van. I'm the EMEA lead for blockchain and digital assets for consulting services at MasterCard. And today I will present a short bit on blockchain and DeFi and how we can leverage this technology for growth. So firstly, I'll present a little bit from the market perspective. I know from the press we've heard some negative news last year with regards to cryptocurrencies. But cryptocurrencies is one use case of blockchain, and blockchain has a lot of potential. As you can see, it's projected to grow to $163 billion in revenue by the year 2029. So this is by the end of the decade. A lot of it will come from consumers, from industry, and also from government innovation and development. And most of it will come from across the geography, but Asia Pacific will be the leading area that's driving this. So before I dive into use cases and capabilities, I'll do a little bit about blockchain 101. So what are the different features and capabilities that really drive this growth? Maybe can I see a quick show of hands if people are familiar with this topic? Please raise your hand. Okay, so maybe 50-50 is good ratio. So very quickly, what are the features of blockchain that really drives technology growth? So first and foremost is the distributed ledger. So every user has access to the same database, it's transparent, information is available in real time, and there's no central authority. It's cryptographically secure. It has keys, which is required to make any changes, and then after a transaction is documented on the blockchain, it can't be tampered with. It could be a public or private network. So commonly, the public network that you might know of is a blockchain, a Bitcoin or Ethereum. But then there's also private networks like Onyx by JP Morgan, Ripple, that is only privy to certain members of the network. Now, last but not least, is programmable. So you might have heard a lot about smart contracts. And this is really the capability that's driving a lot of use cases. So the ability to program something, automate it, so that you don't need that central figure to allow action. And then coming into the DeFi space, so what is DeFi exactly? So it's a collection of use cases that exhibit financial services capabilities. So leveraging the blockchain and smart contracts to enable some of the things that we might do today in payments and financial services, but more efficiently. And then on top of that, new use cases that we don't have to date. So I'll provide a couple examples of different use cases, starting with payments. So first, this is the cryptocurrency and stablecoins use case. And I think this is the one that you guys are most familiar with. More recently, companies are looking more and more into stablecoins, looking at how companies can use stablecoins across different entities, across geographies. This will really enable payment efficiency, operational efficiencies, so they get a lot of cost savings out of this. So you see companies like JPM, they have their JPM coin, Walmart, they have their Walmart coin that they can use across their suppliers. Really kind of extracting those value from provenance, from automation. Another use case is for insurance. So, for example, healthcare insurance. There's a lot of different entities involved. There's hospitals, pharmacies, GPs, specialists, and all of these entities, they need to share information and payments across the ecosystem. So with blockchain and with smart contracts, you're able to automate some of this sharing of information and payments, making it more efficient and fast, and risk averse as well, because you don't need to manually input a lot of the data. Asset ownership. So this is relating to tokenization. So a very familiar example might be NFTs. So this is an example of art NFTs. But now more and more we're seeing that we can tokenize a lot of different things. So for example, real estate, tokenizing real estate enables democratization of finance. So more and more people have the ability to invest in smaller pieces of real estate and having that ownership and certification and provenance associated with it. We also have certification and registration. So most recently, the e-krona went through a pilot phase where they tested the ability to pay for an item and then getting certification for it instantaneously. So in this use case, we have a buyer that's trying to buy a vehicle. They provide the funds, whether it's from themselves, from a bank, into an escrow, and then the dealer has to provide the paperwork and submit this as well. And at the time of exchange, the smart contract can determine, okay, we have both these two pieces of requirements, then the dealer gets paid and the buyer gets the certification. And this is automated, so you don't have the intermediary in the middle. So this saves a lot of time. And then another example is around digital bonds. So digital bonds have been in play and an experiment since 2018. Recently, in 2021, Germany came out with a law whereby securities can be digital or on paper. And this really propelled a lot of companies to look at innovation in this area. So a couple examples here, KfW, SEB, Credit Agricole, and also Siemens. They looked at how to distribute and issue a digital bond. with doing so, they're able to decrease a lot of time for settlement. So in the case of Siemens, they decreased their settlement time from 8 days to 2, so that's quite significant. And also it eliminated a lot of paperwork, so it's very sustainable as well. And then we also have repo, and this is a little bit new. So the infrastructure that is being used to conduct repo has been very dated, so it's not been refreshed for a very long time. And very similarly to digital bonds, the ability to use blockchain and smart contracts to automate a lot of this really decreases the amount of time the collateral is kind of stuck in the process and decreases risk for all the parties. So this is a very interesting use case as well. So you might ask, are there some risks associated with this? So this is kind of the question that we need to pose to ourselves as an industry and also as consumers, as representatives of corporations. What are the risks out there? So of course, risks to consumers is that none of this is very much guaranteed. So unlike having savings in a bank account, your funds are not guaranteed. Risks to corporations, there's not a lot of standards out there at the moment, so everyone is doing various things and it's very hard to partner with scale. So a lot of governments across the world are kind of looking at this and asking themselves, how do I define digital assets? How do I categorize it? And how do I regulate it? So the range of different countries and their progress in this varies. So in the US, most recently the House passed a bill to look at this and develop a framework around digital assets. In Europe, we're very familiar with MiCA, so we recently passed this in June. So all the issuers have to register in order to introduce stablecoins starting next year. And they're even looking at MiCA 2, so beyond that, what should we do with, for example, lending and staking? In South Korea, they proposed a consumer-centric law that protects consumers and users on various digital assets realms. And then in Australia, they're looking at how to connect digital assets to any existing regulatory framework to kind of simplify the process. So in a nutshell, there's still a lot to figure out because governments are trying to balance between allowing innovation to flourish, but then also providing this safety net and safeguard for consumers, companies, everyone in this ecosystem to operate. But for me, I think the technology has a lot to offer, and in the future we'll see more and more from companies providing new products and services, and more interest from consumers as well as it becomes more and more mainstream and more safeguarded. And I think my time is up, so thank you very much.
Thank you. That was Mia Van from MasterCard, and amazing time management, thank you for that. And I do apologize because I announced a different keynote, the right speaker but different keynote. The keynote Reinventing the Wheel will be around 3 p.m. So, oh yeah, I have it mixed up, but don't worry. Okay, now, for the next panel discussion, No. We have another keynote speech, a lot of agenda, so mistakes can happen. The next keynote is called Innovation in Finance, and I suppose you are Martin Kobza, COO of Česká spořitelna. Here we go, and 10 minutes, please. Thank you.
Correct. So hello everyone, and as mentioned, I'm COO of Česká spořitelna, responsible for the IT and operations of the biggest bank that we have in Czech Republic. And I'm working on this one for the last 2 years, but before, 8 years of my careers I dedicated to the governance of the digital activities on the Erste Group level. And among them, there was one that I was asked to talk about today, and this is George. So George is the electronic banking. By now, it is an electronic banking that is available in 6 countries of the Erste Group. And it is the most used electronic banking in Czech Republic. And with 180 million logins every month. But I will not talk about features. I will not talk about AI. but I will talk about something else. And I will talk that for any financial innovation, you need to do one thing right. And this is what I believe that differentiates George from many other tries of different banking groups that all have the same dream, to have one banking across all countries. Just at the moment, it is the Erste Group as the only one that succeeded on this mission. So let me tell you a backstage story about collaboration and the way how execution was evolved in the Erste Group. So, and the story is very long. You know, I have 10 minutes, and the history is more than 10 years long. So I have basically 1 minute for 1 year. So we will try to nail it in time. And we go back to 2012, where the group CEO had 2 sons. They have been like 13 and 16-year-old, and his biggest worry was that if they will be grown up, if they will be happy users of the bank, and if they will be proud to be customers of Erste Bank. And that's why he created back then an incubator that was completely separated from the bank. It was, as I mentioned, back in 2012. And there was 12 people, and basically there was one room in the center of Vienna, headed by the designer Maurizio Poletto, and everybody that you see there mostly had nothing to do with banking before. You know, that was smart young people that had a lot of talents, many of them very good developers and technologists from mixed diverse of countries. And they put them into an entity that's called B1, and they got just one mission, so that they should reinvent the banking, so the sons of the boss who would love to bank with Erste Group one day when they will be grown up. And this is how it all started. And it is very easy to have then prototype working on the notebook of the developer. You know, this take like 3/4 of a year, and you have perfect banking that is working on the notebook of the developer. Hello? Yeah. But then the difficulty is that how do you plug this one on a very traditional Austrian banking kind of group? Because we have 50 different Sparkassen across the Austria. So how do you plug this one on the country? And for this one, it is very simple. So you had this one team sitting around the one desk, everybody smart, very efficient, because everybody knows about everything. You sit beside one kitchen table, you are isolated from the bank, but in order to grow, to be good enough, and to pass all the legislative stuff, and to make the solution integrated, you need to grow way more. So, and this is, you start organically growing with one developer, will start to hire another developer, and they start to form a team. So then you end up with a team of back-end developers, front-end developers, and basically you can see the leaders as they start to form themselves. And this way, we have been like organized, and we have achieved a rollout in Austria. It was in the year 2015, from the beginning of the year, and very early it was a huge success. The George changed the perception of the Sparkassen from like traditional banks to a very innovative bank. So you see it on basically every parameter, including value for money, was that at that time really reinvented by the introduction of the George. And at that time, nobody believed that this would be the group solution. You know, we just saw that, okay, this is doing really good, so let's see and roll it out next. And then we picked the biggest countries that we have, Czech Republic, Slovakia, and Romania, and we start the rollout. And then you hit immediately another challenge, that as you are organizing these blocks basically are becoming bottlenecks, and they are really becoming very much integrated, and they are super anti-agile. And we have tried to work agile, but then if first the developer is sending that to the testers, and then he's sending it to another department, this simply didn't work. So then we had the second phase of transformation, and we changed the team, always adding new and new people, and we created project squads, or the project teams, that have been dedicated to roll out the solution to individual countries that we have been having. This is as well, like this was really improving the situation for a few years, and we advanced heavily, and there you see that you cannot anymore, no matter how big your team is, but you cannot anymore support 6 countries with the same team without heavy automation, without very huge progress in the agile and the way you run it, and without the system how you will then align across the countries who has priority for what and what will be done and what will not be done. But there is one different element that happened to us at that time that we haven't expected. And this is that majority of the initial leaders at this stage where the kind of solution become stable solution for millions of customers, and there became rules in the games and you have to be way more structured and organized, they either didn't want or they were not able to grow themselves quickly enough so they were able to scale the team, or they didn't want to do the automation. And basically all of the leaders from the back end, from the front end left at this stage, and we had to have a new generation of leaders that were grow and like let their teams grow, you know, because for us everybody of them left from a different reason, you know. The front end guy wanted to have control of everything. This is super possible when you have a team of 5 people, but not anymore when you have a team of 20 people. You know, the back end guy didn't want, or it was not, nobody was good enough, you know, so he was not able to hire people because nobody was good enough for him. And that's why we were not able to grow the back end. And then when we had the people there, they have been discussing about every commit like 400 different comments around every commit, you know, if it's like good enough, stable enough, secure enough, tested enough, and so on. And this was not enough for the speed that we wanted. So that's why all the leaders will change in this stage. And we went to the next stage. And that was basically when we rolled out the 3 additional countries. The countries were very happy with the system. Customers started to jump on that one. We have a success. But then you realize that you have 3 more countries to roll out, and suddenly you have another problem, that the countries where you have 4 million users, they demanded innovation. We want to have new features, you know, that the project setup was not good enough, and that we turned to product squads, you know. So we simply cut the George into the pieces, like payments was one squad, and then we had like many squads, over 20 different squads specialized on small part of the application. Those guys then have been focused on rollout, but they have been saving some capacity for the innovation in order to combine this one, you know. And then the team was still growing from 100 to 200 at this stage. We have been benefiting from one point, that in Erste Group, every bank is different, because Erste Group grew quickly by acquisitions, so we never had any consolidation. So for us, it was, we didn't care if that would be bank from Erste Group or not, because there was no difference in between those 2 banks. But we built smart stuff that we have a group API layers. That was a layer with defined APIs, and if somebody wanted some feature, he has to provide such API. And basically then we have second connector that we call country adapter, where you get all the transaction all to the George system. But the George itself was running kind of separated from the banks. And then we came to the next stage, and this is like when you already fulfill all the countries, everybody is happy, you are 1 or 2 on the app stores, you are like already now, as I told you, reaching 10 million users. And now basically what we are coming, so and how do we now roll it to new solutions for corporate? How do we now make a George business? So how do we then have George Junior? And how do you make the George proactive? And also there's a new set of challenges, and you realize that even the previous setup is not good enough for that one, because no matter how you cut the organization into the pieces, there is some piece that is not priority, but you have the other people, you know, and this is like, it's hard to scale that one, because even if, for example, now payments are not priority, you have a squad dedicated to payments, you know, and you can maybe send some guy from that one to another one, but you still have occupied capacity, and there is some other area where you're logging capacity. So that's why we shifted, and we now are running under the product clusters, where there are way bigger groups of people. In the squads, they are not all roles. Some roles are on the cluster level, some roles are in the teams. And basically, this is how the George is running now, you know. But the lesson is that whatever you do, startup, intercompany innovation, just be ready to change. So no matter how you run now, I believe even this setup will in 2 years not be good enough, and we will get to another setup. And this is like how the George was born. Thank you.
Thank you very much. Thank you. It's Martin Kobza from Česká spořitelna. And now, I suppose, Yes, now it's time for the second panel discussion. Therefore, I invite speakers to a panel discussion with banking versus fintech topic. And speakers are Dan Smith, COO of Jimmy Technologies, Jan Kohout, partner at PRK Partners, Zuzana Pavlovic, started by ČSOB, Jan Šovar, founder of FinRec Partners, and Daniel Zeman, front-end team lead at Partners Bank. Hello everyone, please take your seats. Maybe this time I will take this one to change a little. Okay, do we have enough chairs? No, we don't. May I ask for another chair, or maybe I'll just... Okay, I will take this one. So, yeah. Okay. Okay, yeah. Thank you very much. Well, nothing that we can't handle, right? Okay, so welcome to our panel discussion. Thank you for the counter. So again, we have 40 minutes. There is a lot of you in the panel, so I hope that we will cover many different opinions and points of view. And as I mentioned, the topic is banking versus fintech, because a lot of people think that these two things are against each other, and also some people see it as David versus Goliath type of situation. Like these big, old, bad banks versus young and fast-growing technology companies. So, but what is the reality? How do you see it? How do you see this relationship between banks and... how do you see it? How do you see this relationship between banks and fintech companies? Anyone can start if you feel like it. Oh, and this is the second mic, so I'll put it here.
I'm warmed up, so I'll start. Yeah? So I don't believe that it's one versus the other. I mean, there has been that phase where everybody was threatening that now the fintech is killing the banking, but we see that this is not happening. Yeah? So, and we see that there is a lot the banks can learn from the fintech. Fintechs can learn from the bank, and there is the sweet spot where they still believe that in many areas we can collaborate for the good of both.
Yeah, thank you for a nice intro, because I think dealing with I'm running an accelerator inside the bank for the startups. So what I see is that startups and big corporations, generally speaking, not only in the banking sector and in the financial sector, are needing each other very much. The startups, they need some money, they need distribution channels, they need to access the customers easily, while the large corporations, they need to bring innovation fast, which they are usually not able to do internally. So this can be a perfect collaboration. Of course, there are cases when they are against each other, so David and Goliath definitely has a place here as well. But I think if you tackle it in the collaborative way, then it can bring great results for both sides.
Thank you. It was nice.
I think there is a small amount of contradiction between the two still. Let's maybe face the underlying sort of why did fintech blossom up? Why is it existing? Why is it continuing to grow? Why is it infiltrating into the big banks? And the reality is that it's decentralized. It is an attitude and an atmosphere of somewhat rebelliousness and the desire for people to not be digitalized and not be tracked by banks who will then pass their information further on to government or otherwise. So there's a bit of rebelliousness on the individual to face the banks in a way that says, I am an individual, please treat me that way. And I think the banks have reacted to that quite nicely, and they have created individualized worlds like George that allow people to manage their banking as individuals, but I do think that underlying rebelliousness remains.
Thank you very much.
And there is also another aspect, and that is regulator. And especially here within EU, we have quite ambitious regulator who wants to do something ahead of any innovation, just to be sure that everything is in compliance. And this makes a bit issue for new development, of course, because then you have more regulations than the real products, and you have to spend much more time on avoiding any problems with the regulator rather than focusing on the real issues that are of concern of the customers. And this is one part. On the other side, you may have, let's say, some excesses like it was with this Xio product tokens, and then despite there was, let's say, attempt to have some permission or whatever from the regulator did not really act in a way that would prevent potential clients and these failed customers with these products. And this really has some really, how to say, deteriorated effect on the whole ecosystem of fintech and banking systems, like in the expectation what it can bring.
Thank you.
Okay, so I don't think in terms of David and Goliath. I think in terms of competition. I'm here for the competition, and I think it doesn't matter if it's a startup or a big bank. We can, through competition, we can push each other to new heights. So that's my opinion.
I think certainly in the terms of the Czech Republic, the regulation of the fintech, as I may say, somehow overskipped the situation that was here in the Czech Republic, even if we are in the part of the EU market as such. There were lots of new things that were new also for us in terms of what had been happening at that moment in the current market, local market here. We can take as example of the PSD2. There were huge expectations of the PSD2 as a disruptor of the market, which in terms of the Czech Republic, this is something that hasn't found hasn't met the expectations. We on the other side, we saw lots of regulatory challenges and the business challenges in terms of the accommodate the EU regulation. So I think going specific for that issue in terms of the regulation, that was too far forward in comparison what was the situation in the Czech Republic at the moment.
Thank you very much. It's good to know that banks and fintech companies are not necessarily fighting each other. That there is still a competition, but also a lot of room for a cooperation because you can benefit from each other. I would like to talk about regulations that you mentioned previously, because of course, especially EU market, financial market is heavily regulated, and it doesn't seem to be less regulated in the coming years. So we can expect more and more regulation each year. Therefore, it is very, very difficult to doing business, starting business on European financial market or capital market, and it is also more and more costly because more regulations, more people, more money, more energy, more hours. So, do you see it as a limitation to innovation, as are regulations preventing new companies to start and entering the market, or what is your position?
If I may take, I would choose one positive example for start in terms of the regulation. When I see that the regulations tries to react what is the unfortunate situation in the market here, and that's I'm talking about the PSD3, which is at the moment on the table and will come soon also to our legal system. There is there is a specific reaction for the problem at the moment, which is the opening and maintaining account for the payment institutions and the payment services providers at the bank. As you may know, there is a problem, or there has been a problem in the market for the applicants for the payment institutions and other payment services license to get open the account at the bank, as they need to have the account to be able to get the license. So this is something specific that the PSDR, the Payment Services Regulation, is tackling this problem, and it's introducing a new specific limited tries to give the justification or the motivation for the banks, and also kind of protection for the applicants to be able to challenge that problem and to be able to open the account at the bank. So this is something I think is one of the pluses of the new coming regulation, which tries to solve the problems which we specifically here in the Czech Republic have been tackling for some time.
Thank you. Next one.
Yeah, I think the regulation world actually displays what I was mentioning a moment ago between the contradiction of the two. The fintech world seeks total freedom and total openness, and well, unfortunately, there's no consumer protection in such an environment, so it can be dangerous for those who do use such channels. But properly built, a platform can certainly take into account protections and be correct as well. So is there a self-regulating market that's possible? On the other hand, define how you want to drive the new technologies forward. I dare say that the gentleman sitting next to me will tell me that he's done an extreme amount of development of new technologies from Erste's hands, while small companies such as Jimmy has developed things equally as amazing for small companies as well. So define what it means to be innovative. You'll find plenty on both sides, and you'll find plenty that's actually working symbiotically, especially around things like card payments. You can't really redefine too much of the card market, Visa, MasterCard, a little bit of American Express, and maybe some other minors. There's little else in platform that can function in the world, so we all tend to somehow move to those payment processes and those card offerings, even into the fintech world. So there's a mixture of both. There is plenty of innovation to go around, and those who will succeed are those who realize what that proper mix must be between self-regulating and adhering to what government says we need to do to protect consumers, but then also push back a little bit on government and the realization of space that government exists with a monopolization upon the valuation of people's labor, their assets, commodities. That makes us all a bit uncomfortable as well.
If I may add a bit react on the positive approach and note from my colleague Honza, there is, let's say, draft of a new omnibus regulation regarding the retail investments, and it seems that although we have quite, I would say, detailed regulation on that issue, there will be some additional requirements on the providers of the banks providing these services to retail clients. And we already noticed that some of those who had been providing these services are selling the business because it's over-regulating. It doesn't bring any, let's say, any profit to it, and it's much more paperwork than any sense for it. So they are trying to convert, rather focusing on corporate clients rather than retail. And this is perhaps something that is going, I would say, to contrary to the idea of the protection and also of the whole market in Europe, how to support and individuals to be more focused on those type of investments.
Okay, so I don't see regulations as something that limits the innovation. I simply see it as a constraint within which we can innovate. And I don't think it doesn't stop us from innovating at the moment. I don't have enough experience in that field, so that's it for me.
Thank you very much. Would you say that banks have some advantage when it comes to implementation of new ideas and innovations, since they are already on the market, they already know all the regulations, they have almost unlimited resources and manpower. So what do you think? Do they have an advantage in this regard or not?
Look, on this one, we definitely don't have unlimited resources, but a little bit to this. Look, the dealing with the regulation is pain, but we as the bank that is here have no option. Right? So we are in that, we have millions of customers, you are going through any regulation that comes and you will deal with that with a compliant manner. I am, to a certain level, even thankful for all of this one, because I'm not as afraid of the fintechs as I'm afraid of the big techs, because they have unlimited resources. And for them, this is making banking unattractive, what I kind of appreciate, because this can then be something that will really make our life hard.
Thank you. Anyone else?
And God forbid they decided to start opening banks. And imagine if there was such a thing as the local Facebook bank to go to, God forbid, or Google Bank.
I will just come back to your question that is it easier for the banks to come with innovation? I don't believe that. I think that there is too much restriction to begin with. So practically you don't approach a problem open-minded. And one part of that limitation is the regulation. The other part of the limitation are the legacy systems. And that makes you hugely limited, and practically you don't come up with the best solution, with the most attractive solution for the customers. You just come with a solution that is deliverable and works. So I believe the startups are better equipped to come up with innovation. And your previous question was about, is the regulation limiting them? I think so, because it costs time and money, and they don't have unlimited time and money, so they need funding, and it's really hard to get funding before you have first paying customers. So I think there is definitely a limitation, but you have to approach it also from that perspective that in order to deliver a workable solution, not always you have to have a license. So that's the one good news. The other good news is that once you get the license, you can do business in the EU. So these are the two good news for the startups.
Thank you very much. Anyone want to add something else?
Yeah, I think I would agree with that. The regulation now I think represents a barrier in terms of the access to the market, definitely. And this barrier is getting huger and huger. So for the current participants, this can be an advantage, because sometimes they receive, I would say, a regulatory gift. So once you have, for instance, a certain license and there is a new service that is going to be regulated, the regulation sometimes contains a provision that the entities that currently have a certain license are able to provide the services without getting a new license. So this is something that certainly strengthens the position of the current participants in the market, and makes it very difficult in terms of the resources, the financials, IT at the moment, which is a really huge domain in terms of the investment and the new entities that would like to join the financial market, limits the access to that, irrespective of the fact what is, I think, sometimes written in the background documents of the EU Commission.
Thank you very much. Before I ask another question, I would like to remind the audience that you can participate in the discussion via Slido. You can ask your questions there. The code is EFIS, E-F-I-S. It is written over there, I just noticed on the roll-up. So if you want to ask any questions, just write them down in Slido, and at the end of the discussion, we will definitely look at some of them at least. Now, in the previous panel, we were talking about some forecasts for the upcoming year. Of course, I suppose that banks and fintech companies are also looking forward to the next year. And what do you think are the biggest trends for the next year? Which trends did you identify as that something that will shape the financial market?
So I think that it's definitely getting closer to the customer, meaning to the point where he needs something. This is the immersive banking and trends like that. That's one. The other one, many of them were mentioned by the keynote speaker, Marek Ditz, is the speed and transparency. It's definitely also ongoing. Plus, I think a huge pressure on operational excellence is a very old word, but it still works. You have to be very efficient. And I think with every crisis, with every downturn of the economics, that pressure is increasing, and it may hurt, but it will simply increase the pressure to innovate.
Necessity is the mother of invention, and leaner times do drive innovations and do require companies to, let's face it, have less cost exposure, which normally is in the human capital, and that converts usually into activities within the server.
Look, I believe no conference would be complete nowadays without AI, and so that will definitely change a lot.
I didn't want to say it, so I was hoping that some of you would mention it. Thank you. Anyone else?
And also perhaps there will be close, I would say, either cooperation or even acquisitions of various fintechs that will traditional banks bring closer to cryptos and blockchain technologies, although there are some private blockchain technologies implemented by banks. But I think due to MiCA and other regulations, there will be soon much more, I would say, platforms that would at least cover these two different worlds. There is already example within Erste Group or Česká spořitelna, this funding of one of these startups, it's called Blockmate, and there are some other jurisdictions within the EU like Portugal or France or Malta, where there were, even before MiCA regulations, supporting this type of financial services. So let's say in Portugal we have noticed that there is already one bank that provide or receive license for digital assets and services clients in this area, and I think this will be some, let's say, new stage of cooperation, maybe shaping differently both from the efficiency and cost-wise the banking system.
I think what we will see is that the current players will take advantage of the new challenges, and the new startups, we will see less, I think, or not that enough startups which we would like to see.
Oh, I see some contradiction maybe to this opinion, so you don't agree?
I just think that usually the bad times are good for innovation, good for startups, good for new solutions, so I wouldn't be that pessimistic.
Oh, it's not pessimistic, I thought it's optimistic.
Well, different point of view, okay. And now I would like to use this unique opportunity that we have Daniel Zeman here, because you have quite a recent experience with building a bank. from the scratch, basically. How would you describe this pleasant experience? That speaks a lot, actually. The silence speaks for 1,000 words. Okay.
My celebration was the receiving the license, and that was probably.
I guess the challenge for the business guys, for us developers, it was just to do it right from the start, and I loved it. It was like perfect for me.
So you are looking forward to build another?
No, I just will make this one really good.
Okay. Thank you for that, because it's quite unique, since the market is so saturated. There is, it seems that there is not much space left for new guys on the block. But well, I wish you all the luck. Now I will just check the Slido, because we have 15 minutes left. But since there is 6 of you in the panel, someone is calling me. No, I will call later. Okay. Oh, we have 3 questions. Yeah, these are the old ones. Okay. Oh, this one is nice. Do you see crypto as an opportunity or a danger for the traditional financial banking system? If it is an opportunity, in what specific ways?
Yes.
Thank you.
It's dangerous for current environments, and it can be quite an opportunity for current environments as well. Again, back to my original point made about the rebelliousness of fintech and the rebelliousness of blockchain and cryptos. It's a world that very much wants to decouple from regulation, but is starting to realize that in order for consumers to trust it and actually engage it, there has to be some, but the elephant in the room for economies, there's going to be issues, I think, with all currencies in the short term until we sort out what it is that the world is actually going to use. The dollar doesn't seem to fit the case any longer, and certainly U.S. policy has misused its former position. Will it be BRICS, or are those economies too unstable as well? Or will it be crypto? Or will it be a combination, or as said, a bucket of currencies, which should scare the hell out of anybody? Because that ultimately means you're going to have your currencies and the stability of your economy tied up into, well, economies that you don't want to be tied up into the middle of. Russia, whether we like it or not under sanction, is very much centralized in a part of what Europe does and doesn't do. Their oil is, whether you like it or not, being put into your tanks. Crypto might change that.
I would as well say that both, because on one hand, we ourselves are not clear what situation will prevail into the future, but we have to accept that more and more people has their assets in crypto. That's a given fact, and no matter if it is good or bad for them, I cannot tell. But surprising is that we still will see some kind of regulation around this one too. Because now I was talking recently, 2 weeks ago, to the chief designer of Revolut, and they have now new upgrade, version 10, and you will see the crypto on the overview as a separate category. And she was really not happy about that, but they have been forced by the UK regulator that they cannot call it investment, so it has to be completely separated. So there will be still a bunch of regulation, but our standpoint is that basically we would like to provide financial health advisory to our customers, and whether he has his assets in a home on the pillow, or he put it into the crypto, or he has property, we would like to, over the period of time, show it in George so he can see that, and have complete picture. So that's the point. But so far we don't actively promote the trading of it.
I see. Okay. Some other ideas, opinions?
I think, let's say, like it was said, there are pros and cons, and it's great from crypto point that you can use it individually without any regulator. It's, let's say, diverse between various verificators and etc. On the other hand, it could be misused by let's say entities with large budgets that would like to destabilize the whole financial system, and this is something, and even like maybe avoiding sanctions, etc. So to some point, pure crypto could be even to some extent toxic for our part of the world. In past, we could hear that these other regimes, like in Russia, Belarus, China, perhaps there were some limitations on using cryptos, etc. But now they can use this tool how to avoid, if necessary, sanctions, and this is only part of that. The other issue could be is quite consuming energy for let's say even powering the system of blockchain, and this is something that need to be also considered, how this would affect the whole environment of mining, verifications, etc. Because there is limited, I would say, power capacity, especially within Europe, and when we have other challenges like EVs in place, it's difficult to combine all that within this current system.
Okay, anyone else would like to elaborate on this topic?
Thank you. To your question, I would also say both. But I think in the EU it has already been decided, because we will have a new regulation for the crypto assets, and the way in which the regulation is taken is basically a heavy regulation as for the rest of the financial market. So this will definitely have implications for the EU crypto asset world, and also for the outside world, I think, from the EU. But we will see some movements, which we have already encountered, in or out. So I think that that new regulation will definitely reshuffle, I think, the current world or the current landscape of the crypto asset companies. It's more likely to think that they will become a part of the financial market as it is now, despite of the fact that the incentive for the crypto assets was different, the opposite one, because they wanted to be outside the state, the regulation. But what we will end up in the EU, that we are sucking in the companies and all the individuals, also the issuers of the crypto assets and so on, under the umbrella of the regulation to safeguard the assets and to protect the consumers. So I think this is something I would still say both, but I think that the new regulation will rewrite the whole landscape of the crypto asset entities in the EU.
I don't know the details of the new regulation, but I think it's obvious that crypto will probably stay what it is now. So it will be an instrument that some people will be keen to use. But I think it's lacking some basic characteristics of a currency that you would want. So it should be a little bit stable. We've seen ups and downs in the past, and I don't think that any one of us would like to have all their money in it, which is like the essence of having digital currency. Then you wouldn't like to have too much money in that, because you don't know whether it's going to fall or not. So I think that it will be some improved digital currency that will rule the world later. But some of the downfalls that were mentioned, pitfalls that were mentioned, like the energy demand created by this, the lack of regulation, the lack of guarantees. If you lose the code, sorry, you have no money. Probably these will have to be first removed and then it can work.
Thank you very much. But there is one counter to this as well. Putting all of your money into currencies based on that monopolistic position of governments valuing our work, our assets, is also quite dangerous, as we see quite literally every time we go to the grocery store. Some of us
You take the risk.
often, I admit, but it is also quite dangerous to sit in a devaluing currency.
Well, I would say that we definitely don't have enough time to discuss this topic because it's very nice. It should take like the whole conference only discussing this.
Maybe one last note. You take the risk by living in that country. So you pick the country where you live and you take the risk of the country on you.
But that's the thing that I think fintech has added to the entire sort of discussion, is that movability of funds between different assets, and currency being some of that asset, and blockchain and cryptos being some of that asset, and even into gold and into other ways that you can manipulate your funds and hold it in positions that you are more comfortable with as a consumer and, as I said in the beginning, as an individual. Yeah.
Thank you very much, and we still have some time left for one of the audience, questions from the audience. Do you see conversational banking being part of internet banking? Not simple chatbot, but real customer AI assistant that will advise on investments based on behavior and data. Well, AI investment assistant.
I don't think that's possible right now under the regulation, but maybe the colleague will know.
Look on this one, like it is 1 year and 7 days still AI changed the world and become a hype. And if we see what happened in 1 year, I say 100%. It is just a matter of time. So it just when you extrapolate the time, and it will be even natural, I would say.
Yes, maybe I can add that once the regulations will be proposed by AI, then we can wait that Professor will be this.
Any other thoughts and opinions about AI assistants being incorporated in internet banking systems?
Well, we can certainly use it in code. Like, it can do a lot of stuff for us developers. So, and we already started experimenting with it.
Actually, I participated at a week of innovation. You know, it was at your bank, Czesov, and actually, then was one company that already do this. So they had this AI assistant. It was very nice, nice-looking woman, and well, she can definitely do a lot. And the conversation really felt very, very real. I was kind of scared at the end because it was like too real. You know, like, okay, I'm talking to a computer. It was this dystopian, really. I don't actually know if I like it or not. It was very strange. So, but this technology already exists, and so maybe you can. Oh yeah, of course. But I would really like to hear those investment advices. Because ChatGPT is very creative and it tends to lie a lot, so it could be a really fun experience. I should try.
You take the point, they are creative, so they can say whatever they find appropriate, but it's not always true. Like.
Perfect. We still have like 3 minutes left. Oh,
maybe to that one, you know, because like the problem in banking is that if we give you advice, we are reliable for the advice. So it cannot be like every second or third time it will be wrong. So that's why we need to wait when the technology will be there, or if there are robo-advisors, they are using different AI technologies than the large language models.
Thank you for that. We still have little time left, so my final question to close this amazing discussion panel will be, imagine yourself as a customer. What service would you like to see in your internet banking, or if you are using other alternative, what kind of service would you like to have, to see, to experience as a customer that is not already there? I mean, and try to be brief.
I would like the internet banking to read my mind so that I don't have to look up in the menus what I have to do.
Well, with AI implementation, it could be actually very possible. Maybe in the future.
Examining recently exchanges within our business, Revolut has what I think is quite interesting, and I would love to see on the bank platforms, which is stop and put orders on the various currencies that we have to use. If I could have a stop put order in place, then I may not have such volatility in my own business and losses of revenue and increased costs just simply due to trying to work in a multi-currency world. Revolut has this on the platform, so I thought it was very interesting there, and in the banking world that would add value.
Anybody else? Or are you satisfied customers of your banks and you don't need anything else? Come on.
Look, I mean, I will be for the one, because like I already have in MyGeorge integrated ChatGPT, and it works magic, so you don't have to search for the functionality. It can help you out immediately. Just there is some way to get to production for public.
Actually, I'm waiting for our application to be public, especially for the one that is meant for children and parents. So,
I think I will let myself to be surprised.
So you are looking forward to the next update of your mobile app for internet banking, and we will see what will be there, right? Okay, that's it. So thank you very much for attending this discussion panel. I think it was very nice, and I'm really glad that we settled in the beginning that fintech world and banking world are not completely, or are not that different, that they can cooperate in many ways and they can learn from each other. That's very nice. So thank you very much. And what comes next? Oh yeah, we have, before the coffee break, we have one more keynote speech. And yeah, Sustainable Finance and Investment, Gabriel Stefaniak. Here we go, and the mic is yours. You have a presentation as well, so we can use this. And 10 minutes.
So the last speech before the coffee break. The title is actually wrong. The title should be different, but it's not important.
It's not my fault, but I will tell the organizers.
In any case, good afternoon, ladies and gentlemen, once again. It's my first time speaking in this venue. My name is Gabriel Stefaniak, and I originally come from Slovakia, but for the last 9 years I have been living in the Baltics, which is a bit more north, a bit more cold, and a bit more snow. And my wife is also Latvian, and I have 2 kids who are, let's say, half Latvian, half Slovak. I'm pretty sure most of you have kids as well, and I'm pretty sure most of you have problem with the lack of money and lack of time because of the kids, at least from the human perspective. And from the business perspective, time and money, has been already said on this discussion panel, is also very important, 2 very important commodities. And today I will try to show you or demonstrate how you can save significant amount of time and significant amount of money with something I will speak about. So, reinventing the wheel, building a digital banking platform from scratch. So, saving time and money is quite important. And today we will talk about how this could be useful and why you should be paying attention to this. Before that, we will talk about trends. Some of the trends have been already mentioned during the discussion panel, and I agree that not all the trends are here to stay. Not all the trends are here to replace the legacy solutions, and not all the trends are here to be the next big thing. But there are definitely trends that we should pay attention to, because they will be disrupting, such as the ChatGPT, which is more of a hype than a trend. but it will be trend in the future for sure, where companies nowadays are using it mostly at the back end, with writing scripts, programming, maybe brainstorming. And in the future, it will be used on the front end as well, with direct communication with the customer. Let's take, for example, cloud computing. It's been here for a while, allowing basically businesses to be based in different jurisdictions or locations than the technological solutions they are running. Super apps, that's more of a thing from Asia. I cannot really, let's say, identify a super app in this region. But perhaps if, let's say, Bolt will add a few more services such as embedded finance or embedded investment, they will become a real super app, which is basically an app that you cannot live without. And we have also open banking. That's a huge trend nowadays. There's many use cases. Probably the most common nowadays is that people can basically check out from an e-commerce store using open banking, directly connecting to their bank accounts and checking out. And then we have two buzzwords, mostly among CTOs buzzwords, which is banking as a service and banking as a platform. And I will talk about these in my future slides. So once we identify the trends, what else is important if you want to be successful in financial business or in any business in that matter? It's to listen to what the customer is saying. I'm sure you recall some situations when your customer is approaching you and he is expecting your services to be up and running 24/7, the mobile app and the desktop version to be basically working seamlessly, flawlessly. He wants your customer service support to be very helpful, helping in no time, the app to be customizable, etc. The same for you if you are a customer of a bank or financial institutions, you want your funds to be secure, the transactions happening immediately with no fees. When you are calling the customer support, or preferably you are doing everything from the app, you don't want to be hanging on the line for 30 minutes, right? This is all very, very important if you want to be successful. Now, who is better equipped to identify the trends and listen to what the customer is saying? Is it the legacy banking system or the innovative fintech? This is a classic comparison. I'm not really saying it's a competition. I'm not saying one is better than the other, because if it wasn't for the, let's say, legacy, rigid banking system, there wouldn't be any innovative fintech companies, and vice versa. If fintech companies were perfect, we still wouldn't be receiving salaries on our bank accounts. So here are a few factors, or let's say differentiators, which help you understand one or differentiate one from the other. Where banks, legacy banking system is mostly attracting a wider range of population. They have physical presence, ATMs, customer support is usually in person or on the phone, whereas the innovative fintech companies are usually very lean, they decide much faster, they are investor-backed, and they are mostly online. Now, they are investor-backed, and they are mostly online. Now, coming back to the initial proposition of saving time and money, if you decide to, let's say, challenge the banks, enter the banking business as a neobank or challenger bank, is developing your own software time-consuming, cost-effective, or is it going to take, several years of development and several millions of money spent? We had the presentation of the Partners Bank today, and you saw how long it took them and how expensive it was. So you probably know what is the answer. If you don't decide to do everything on your own, let's say build your own in-house software, the alternative to that is outsource it. And these are the two trends from my first slide. It's banking as a service and banking as a platform. Your two options. The former, banking as a service, is for non-licensed entities. So you basically find a banking partner who gives you both the license and the technology. Basically, time to market is much faster because you can deploy your solution and start doing business almost in, let's say, a few months. However, it comes with significant limitations, such as limitations on the number of products or services that you offer, the customization of the products, the fee structure, because everything is decided basically by the banking partner, and you just put a markup on it. you are also not in control. You're not in control of the compliance and the customers of yours who are being approved. So the alternative to that, and the latter option, is banking as a platform. This is mostly for licensed entities, where you already have a license in place. And if you do not, you can find partners who provide you with a license. As we say in DEXA, bring your own license and we give you the technology, right? So it's basically a turnkey solution for licensed entities. And if I would have to show you one graph or one picture or scheme, it will look like this. So basically it's a fully white labeled, where a customer of yours, of your own digital bank or payment institutions, is coming to your branded website, and he fills up a online digital form, uploads the documents, all the data, and he verifies himself through SumSup or any other service which helps identify the client online. If it's B2B, then you can also connect to pre-integrated password system, which is for your compliance and downloads all the data from public registrar about the companies of your clients. Then some time passes, usually a couple of days, depending on the compliance, of course, and the customer is approved. He enters the so-called self-service portal, which we can say is e-banking, and of course it's also in your mobile app of your banking platform. And of course he can do all the regular banking operations, such as sending money, receiving money, FX, ordering cards, freezing cards, etc. There's also white label payment gateway, so the e-commerce module, which allows your bank to approve or accept merchants. Of course, all of it is required, or let's say is complying with the latest regulations. And you have also your own back office, where you can customize the fees, the products, the offering, the way your solution looks like. And of course, there's a membership of Visa and MasterCard, so you can choose which scheme you want to work with. I will not go into further details, but rather summarize it. So entering banking, or let's say a digital banking business, is rather challenging. Time to market is challenging because the customer expectations and the trends are changing rapidly. So there's a need to innovate all the time, and it's quite expensive if you want to do it in-house. There's one alternative which I'm proposing, and is the DEXA Digital Banking Platform, which can be ready in 9 months, and there's a commitment to that in the agreement. If you would like to hear more, speak more about the solution, or you have some things that you don't agree with, I'll be happy to chat. And I want to wish you a really nice coffee break and a nice rest of the conference. Thank you.
Thank you very much. Thank you, Gabriel. Perfect timing. You finished on the last second. Perfect. Amazing. Okay, ladies and gentlemen, let me welcome you to the second half of European Finance Investment Summit here in this amazing historical space. Do you know what was the purpose of this room? It was a stable. Yeah. So this nice room was meant for horses. So I wish I was a horse living like that. Like this, in the medieval times maybe. And now we are moving on and continuing with our agenda, with our schedule. We are slightly behind the schedule, but only about like 5 minutes, which is pretty good for a conference. No, so far so good regarding the time management. So I thank all the speakers for that. And now we are going to have a fireside chat. Unfortunately, no fire here or any fireplace, but I still hope that it will be pleasant. And the topic is AI era in the finance departments. We already mentioned AI a couple of times in the previous panels and previous discussions. And I welcome Marian Tomko, CEO of DIPE. and Victoria Sokor, CFO of wflow.com. So, welcome. It's nice to have you here. We will have 25 minutes for this chat. I suppose that you are open to questions from the audience as well?
Absolutely.
Certainly. Perfect. So again, I remind you of Slido with code EFIS. EFIS, you can ask questions towards our speakers at the end of this panel or this fireside chat. I will definitely ask some of them if there are any. So my first question for Victoria is the role of AI in finance. Will it take the job of the accountant? So should be accountants worried about AI implementations?
I think I know quite a few people who would prefer that this happens, but obviously not today.
Excuse me, quiet please, because we can't hear our speakers. Thank you. Thank you very much.
Okay, so coming back to the angle, is the AI a friend or an enemy of an accountant? It's neither, because it is a tool, right? Like any tool works well when you know what you are doing. In WFlow, basically, we believe that AI is here to liberate people from the activities that people should have never started doing in the first place. And I mean, my favorite topic, invoices handling. What is an invoice? It's a language that the companies have agreed to use in communication between themselves. What happens in reality? One company, a person in one company, issues the invoice and sends it to another company by postal pigeons, where another person unwraps and manually manipulates the invoice to enter the data into the ERP system. And actually, regardless of our discussions about AI, this is something that is going on at this moment while we are talking. And I don't know, one of the reasons why this is going on might be because there is a lack of trust into AI in the finance field, because for the accountant, it is crucial that the information is verifiable and it's accurate. In our product, we have placed it into the front end where you understand what's going on, and you can agree or disagree, and the results can be 50 to 90% increase in efficiency if you're using it right.
Marian, do you want to add something on this topic?
Well, no, I actually agree with whatever was said. It's not just about replacing people, it's just about giving them another tool. And if they know how to use the tool, then they can be more efficient, and faster, and whatever. So it's not certainly not about replacing.
Perfect, thank you. And the next question is for you, Marian. How to start with digitalization? So any advices for maybe startups and newly formed companies, how to digitalize?
Yeah, actually, as said before, like whatever you start in this situation that is happening just now with the technology and with the changes, it starts with you, it starts with your own mindset, okay? So we have this almost daily on our plate. There is people are trying to digitalize, people are trying to be the ones that bring the digitalization, bring the new technology and everything, but they forget about one thing. They forget about their own specialization in this whole picture, right? So it's good that you have the right mindset, but don't forget about the specialization. Not only specialization of the people or tools you will need to use for digitalization or bringing new technology, but also about your own. So you need to think of your own role, what your own role at the end will be and what it is. So try to focus on that. It's always about the same topic over and over, specialization where we are now. And the other thing that is coming with the digitalization and where to start it, it's just being reasonable and doing things step by step. It's like basically baby steps, right? So you cannot jump down to AI if you really don't have even like basic processes in place. So digitalization starts with a simple really step, that you just digitalize the very basic and then go onwards and go on. So this is the combination. You need to have the right setup in your mind and focus on specialization and do step by step. This is it.
And when it comes to digitalization, especially when you are, for example, starting a new company, we do advise to build it, for example, on your own, or maybe outsource it to professionals. Which solution is better for a customer or a company?
Well, in general, specialization is the key. I mean, you cooperate with people with tools that are specialized in something, and you need to know where exactly is your role there. So usually we provide services to CFOs, and they need to be the ones understanding their processes, their role, and understanding the tools, but in some sort of general level. And then to cooperate with somebody who is specialized in something, and then it's much faster, the change is much faster, you got so much knowledge in one place from different providers. It's much faster than learning everything yourself. So it's, I would say it's a very tough decision, of course, in-house or outsource, but for sure, in some way, you need to outsource different services and different specializations that you're not capable of knowing everything, right?
Yeah, that's I suppose it's only rational. My next question is for Victoria. What are the barriers to digitalization the CFOs are facing?
I will shorten it probably to money, mindset, and metrification for the sake of simplicity. It's more complex than that. But the problem of each finance department is the fact that usually it is in the back office. If you're in the back office, you're very unlikely to get financing to what you want to do, because the money is obviously invested into the business. And let's be honest, changing the ERP system costs a fortune, and it can seriously endanger your business continuity. And also, let's be honest, almost all of the ERP systems today are obsolete in a way that they don't fulfill the needs, like the acute needs of today. Like from a day to another, being able to move your business to another country or to place your employees to the home offices without endangering in any way the business continuity, right? So I believe that many CFOs are blocked due to this, and the good news is that in the era of software as a service, you can afford to buy the best software for a very reasonable, almost, let's say, cheap price, and cover vast majority of processes because of the integrations. And on top of that, you don't have to change your ERP system, because the software as a service is supposed to integrate into your processes and fulfill what you need. So basically, there is a solution for the money problem. The rest, like Marianne has already mentioned, is the problem of the mindset and standardization, because with the AI you cannot automate something that is not rule. You have to know where you want to be still, even if we don't know today where do we want to be in 5 to 10 years, but if you don't have this in your mindset, it might not work.
Would you say that the companies that implement AI tools in financial departments will have significant advantage on the market? Would they be more competitive?
For sure, because if you do not digitalize, if you don't use the smart tools, you are not able to be an attractive employer for young people. And this is the workforce of the future. Today's tools tell you what kind of people you can have, because humans are very creative beings. We don't want to do work that does not bring any value, right? So people who cannot realize themselves will leave, so you have to hire, and this process is endless. So you want to have this part covered so that you can really afford to hire really smart people who want to move forward together with you. And this is a competitive advantage in any company.
Thank you. Marian, would you like to add something to this topic?
This is certainly about tools and techniques that you implement in the place. So about the advantage of these companies, for sure. There is another point of view that was mentioned. It's just about the people you want to work with. I mean, who wants to work these days in the old school company, right? Nobody, really, especially not young people, right? You can have even good product, helping society, whatever. But still, if these people need to do it manually in 90s or whatever, so then it's hard to get the best people from the market. So it's not just about the company or how I am doing it, but also about the long-term investment in the company. So basically,
it's all about the process as well. So not only the final product is important, but also the process in the company. Yes, that makes sense. And the next question is for you, Marian. It's related to data. Why is data-driven decision-making important?
Well, you mentioned you mentioned processes. I mean, why data-driven decision-making? It enables everything, right? We're talking about AI, automation. We're talking about future models, neural networks, whatever. We talk about that, but we cannot do any of these if we don't start with the small steps. Like if you don't do the digitalization and if you don't start where we are supposed to start, we need to have the data in place. Okay, so number one, why is it important? I think need to mention because this enables more accuracy, fast responses, less people working on something, enables much more advanced analytics, data accounting. It enables so many more options, connections that you didn't even see. Business models could be different. It enables new universe of things. But you will never get there if you don't start with the base that is physically works for that. So you mentioned process, okay? So first thing, many companies are doing is they start with the question how this could be automated, how something can be automated without the question without the questioning of the processes themselves. So that's one of the mistakes. We get back to the mindset. If there is mindset we need everything automated, this is not good approach because first you need to know your processes, optimize them, and then automate because it doesn't make sense to automate processes that shouldn't exist in the first place. It's not. It's the second step. So first, you should get the data in place. You should clean the data. For example, if you do business intelligence, then the 90% of the work in implementing any business intelligence is cleaning the data basically and the processes. So basically we just try to skip 2 steps at a time, but it's not possible. So we need to stop step 1, get there, and then from there we enable all these things like AI. You can hear it everywhere, but who can use it? Who really is able to use it properly? Just few companies, and they will have really huge advantage.
Victoria, do you want to add something?
Yeah, actually just a small addition. Every time when I get mad about something not being efficient enough, I remind myself that all people are energy-saving beings. We don't want to change if we don't have to. This is in our nature because you keep your energy for something that is really important. So for every manager, when we talk to our clients about the level of automation he wants to be at, we always say that you have to automate what has to be automated. Sometimes it's just better to do it manually because it's quicker. Yes, it's true. But what Marian says, and I like this point, is that knowing yourself helps a lot. And what you have mentioned before, between outsourcing and keeping the transformation internal, it's always both, because the advisor will not help you unless you precisely state the target. What do I want to do? And for this you have to know yourself, and you have to know that people like being busy. If you give a pile of papers, they will move it around the whole day, because this is how we did things in the past. We do it because we have always done it like that. I have heard it everywhere where I work in finance. Why? Because we have done it like that.
Well, knowing yourself is useful advice in general, and not only when it comes to financial departments. So it comes handy in various forms in life. And moving on, I have a question for both of you actually. And the question is, what is the vision, future, and trends of digitalization? So, who would like to start?
Well, I like to think that the future is not written, as John Connor said, right? And there is no fate other than we make it. But as a CFO, I always have to remind to my bosses, for example, that there are a couple of things that are written, like VIDA legislation, the EU legislation that sooner or later will have to be implemented everywhere in the European Union. The ESG reporting that becomes obligatory for some companies from the next year. And actually, digitalization is one of the ways to approach it. At the point in time, you have to be able to invoice only digitally, and you have to be able to receive the invoice in a digital way. You just have to. This is not a question of if, it's a question of when. In some countries, you have to already. In the ESG, if you include your back office into the scope of the carbon footprint, you might be surprised with the results of how you can decrease it just moving your paper handling or invoice handling into the cloud. This is a quick win, which nobody, well, maybe somebody thinks about, but not everybody. And this is such an obvious thing to do. So basically, for the future, I think nobody has a crystal ball, especially the last 2 or 3 years have shown that planning is not something that we should really keep ourselves busy with, but there are things that I want to believe. And I want to believe that accounting will again become a very attractive profession, a success profession for the young people with the use of the modern tools, and AI is one of them.
Thank you very much. Marianne?
Amen. I hope for that. I mean, accounting has been here like forever, and I don't think it will be like going away. No, not anytime soon. I don't think so. But anyway, the future. Who knows the future, right? But the future is here now, and if there is somebody asking like questions like, will the AI do something? Well, yes, we will. Will we do it purely digital? Yes, we will actually. So these questions don't even, as it was mentioned, like those questions are not even on the table. They are like, when is this going to happen, and how am I going to approach the situation? Me personally, I mean, me as a company or me personally, really, where is my value added? How can I add to the value, and how? Well, we have many people blocking digitalization actually. So people are the blockers of digitalization, of this whole transformation. So. And the reason is that they try to find this place, they think their value added is in doing things, keeping themselves busy. And this is not the value anyhow added to anything. It's actually, slowing things down, basically. So, first thing is to understand your own value, how you can add value to any new processes, or what is the value that couldn't be still done by AI or by any other tool. And then just understand how you can be part of that. And for the future, of course it will be AI running the world. I mean, anybody doubting really? Of course it will be. It will be part of that. It will be like tool like any other. There will be board sitting like 6 board members plus AI, or anybody will have their own AI.
Well, Victor actually mentioned or quoted John Connor. And there are a couple of movies about, what can happen when AI takes over. So, it's not the future we should be looking for, but of course it's like an exaggeration. But Victoria was acting like, okay, I don't really agree with this, so maybe...
I agree with Marianne, absolutely, 100%. It's just that I wanted to add that I am a CFO who was blocking digitalization in my very early age, 10 years ago, and because paper is cheaper. You cannot believe how much it is cheaper to produce the paper, to print it, rather than develop a card program. And when I was working on the budget, I said, guys, this doesn't make sense. I will not show it to the board, because it doesn't. And the CEO, from whom I learned a lot at that time, said, we understand very well that it costs a lot. Like look at plasma TVs that cost a fortune like 15 years ago, and now everybody has it, right? Yes, today it costs a lot, but if we don't do it, 10 years from now, our company will not exist. It's as simple as that. So again, the mindset, I agree with Jan. I just don't like the idea of having AI on the board, but maybe I will like it. But maybe I'm not an early adopter, so.
Thank you for that. I will just check the Slido whether or not we have any questions from the audience. Okay, let me check. Are there any? No, there are no questions in Slido. So maybe if you want to ask something, you can do it also directly. So any questions from the audience related to topic of AI implementation in financial departments? Because we have some experts here, so it could be handy to ask them something for free, you know. Otherwise, they charge for their services. So now you have the opportunity to receive a free advice.
Now, in the software as a service, everything is cheap. Don't have to be afraid.
Yeah, basically, agility is the key. Speed, the faster. If you have two options, the faster is better.
And maybe I have the last question, because in the previous sections we were talking also about AI, and we also mentioned that, you know, especially ChatGPT, for example, tends to be very creative and, you know, kind of misinterpret the data. Couldn't something like that happen also in the financial department? That, for example, the AI could, you know, make something up and mix the numbers or something like that to try to, you know, show better, you know, results or something like that? Couldn't it happen?
This is what I'm always explaining to the customers, that you never know that your people are doing what they're supposed to do, and basically you can expect that AI doesn't do what it is supposed to do. But there's no AI as such. Everybody here is educated. There are types of AI, and our is the invoice specific, for example. So it doesn't really make things up. It can sometimes make a mistake, okay, but it learns and it doesn't repeat the mistake. And as I mentioned, when you put it to the front end of the application, you see what's going on, and the human is still in control. It just makes things quicker. And it predicts some things that an accountant would do. It says, last time you did that, so I suggest you repeat that, but you can disagree. And this is the reason of the use of the tool. This is just, I know what I want to do, I know where I want to be. It's not about essay and creativeness at all. By creativeness, we expect it from people.
Thank you.
Yeah, I think it's difficult to give like responsibility to AI. I mean, I believe it could even calculate like corporate income tax, let's say. Okay, it will calculate taxes and it will file them basically, but I don't think there is enough legislation or enough like understanding what would happen if that was wrong, and who would be the one in charge of that. Well, it would be difficult from the company's perspective, of course, the company, but from I don't know, the structure in the company, like who's responsible? Like the AI, you cannot blame the AI. You cannot blame it. So it can do many things. You can, like the natural language, you can give it the data and it will understand the data and will give you the result. It can do many things, really. You propose the graphs, propose analytics, forecasts, whatever. Like it can really do a lot of things. But in the design of using AI, there still need to be like human control, and there need to be some sort of handbrake. You still need to have some protection where the AI might be wrong, and then with like full automation on, you can really go very deep or late into knowing it was wrong. You can like order supplies and suddenly you see that the entire warehouse is full. And it made the mistake. Whoops! And you have to have handbrakes there.
AI for sure is a way better in recurring tasks and irregularities search and duplicities matching, for sure. We cannot compete. And this is what we want to hand over to AI. This is the purpose.
And with this final thought, we and our fireside chat with Marian Tomko and Victoria Sokur. Thank you very much.
Thank you.
And now, moving on with the program, I think that the next one is panel discussion on investments. This panel is not hosted by me, but by Jana Brodany from Czech Capital Association. Welcome, Jana. And the members of the panel are yes, Michael D. Poisel from PCI Penn Center for Innovation, Executive Director, Zuzana Ondrejová, Principal from JNT Ventures, Dušan Zábrodský, Investment Partners, Rockaway Capital, and we also have Tomáš Dietrich from Mavericks. And I have a huge favor to ask to the audience, please keep the noise down. You know, if you want to talk, do it outside because it's really noisy in here and it interrupts the speakers, and that's not a very polite thing to do. And somehow we have way more people in the panel, so maybe you can explain, and I leave it to you.
Thank you very much. Hello everybody, I'm Jana Brodany, and the last speaker of our panel is Lukáš Vácha, former investment director and currently private investor. Welcome to our panel on investments. How would you imagine under investments? It's pretty simple on how to seek for capital. But I would start with a short question to all the panelists. I would ask them to shortly present themselves so that you know what is their occupation and what is their primary business. So, Michael.
Hi, I'm Michael Poisel. I'm the Executive Director of PCI Ventures, University of Pennsylvania. My position there is to help faculty to start companies around the research, so we spin out 10 to 15 companies per year from the university as an alternative commercialization strategy rather than simply licensing technology. And so we work with the faculty to actually build a business and actually sit on the board of the company and help them build it all the way through. And so finding capital for these companies is something I'm keenly aware of and work on every day.
Hello everybody, I'm Zuzana from JNT Ventures, which is early stage Prague-based venture capital fund, and my position is a principal. So what I'm doing, it's exactly like managing the whole process of the investment from the deal sourcing to overseeing the transaction process and helping the companies grow until we exit our position from the company.
Hi, my name is Dušan Zábrodský. I'm partner at Rockaway Capital. Rockaway is a private investment holding, and in our portfolio we have various platforms through which we actually invest our own money, and those platforms are also open to external investors. We have venture capital fund, we have blockchain/crypto fund, we do private equity, and also we have real estate operations.
Hi everyone, I'm Tomáš Dietrich from Mavericks. Mavericks is a law firm based here in Prague. We are experts in venture capital and private equity transactions, and also supporting technology entrepreneurs, local startups and other players.
Hello everyone, my name is Lukáš Vácha, and right now I am a freelancer or private investor. I used to work for Conseq Investment, which is the leading investment company based here in the Czech Republic. And I'm here in a role of a little bit devil's advocate because my current exposure towards startups is near zero. So maybe it will be nice to see what are the differences between investing into the startups and into other assets.
So thank you everybody. And we're starting with the first question. 3-4 years ago, everybody was talking about how much money there is available for startups. Last year, the discussions were quite different. It's where like well, most of the transactions are stopped, and there's so much discussions about each transaction and it takes so long. Where are we currently? Where are we now with regards to the finance or investments into startups?
So from my perspective in the United States, in the companies that I work with, which are more life sciences than anything else, about 75% of what we do is medical devices, therapeutics, diagnostics. And in that world, investments are still stopped. So across our portfolio of companies, we might raise 20 million a year throughout all of the companies put together. This year, it's basically zero. So we're absolutely stopped. And for us, it's really a matter of the train is stuck at the station, that you've got all the venture capital firms with a portfolio of companies that they want to exit or take public. The public markets aren't happening, so they want to continue to hold their capital to see if those companies are going to need more money before they start investing in new companies. So for us right now, it's not that the capital isn't out there. There's a huge number of venture capital funds that exist. They're just not deploying capital while they wait to see how long this stall is going to take. There is a question in the United States, though, as to where we go from here, how many new early stage funds will be created going forward. There's a lot of thoughts that with interest rates rising so high, there are less risky investments that people can make and still get a good return. So why invest in beginning stage companies and early stage capital? And so if that's the case, and you believe that theory, it could be 4 or 5 years before we get back to kind of the same level of investment capacity that was there just a couple of years ago.
So I'm happy that I will share like more positive view, Michael. So basically, the comparison with Czech Republic is that we didn't see the stop you were speaking about, Jana, and this relates mainly to the early stage funds. With late stage, it was obvious that there was not enough capital, and the truth was that all the investors made like more thorough due diligence process and maybe spend a little more time on like evaluating the companies, and there were not like the less investment made, but the valuations changed. So sometimes it was very difficult to agree with founders on the proper valuation, but at the end I didn't see the huge decline as we saw at the US market. So basically there were like maybe 30% less investment comparing to the other years.
Yeah, from my perspective, it's quite simple. I think that our pipeline is as strong as ever been before. I have to say that there are companies out there and they are pretty good. So basically, from my point of view, always being a little bit opportunistic, I kind of see it as a best time to invest the money. And I agree with what has been said so far. The point is that I don't necessarily see that the number of investments declined, especially not in Central and Eastern Europe, but the amount of deployed capital, it's less. And it's simple, right? Basically the funds are really investing only amounts of money that are really, really necessary. There is no like cushion being built, like that was the case of couple of years ago when companies were fundraising just for sake of fundraising and the fact that they actually could reach the money. So they basically were creating, the cushion. Obviously, the cushion is starting to run out now. So there are a lot of companies that are seeking for cash injection, and they are basically end of their runway, and that's creating a lot of nice opportunities. What I'm a little bit worried is what Michael already mentioned, that basically the really early kind of startup ecosystem is really like struggling right now, because there is not money to be given, that first money to be given to a startup. So basically the new startups are not being established, and there is much less essentially incentive for a young founders to go and create their company, create the venture, because they cannot access the capital. And I think that we will see this in a couple of years' time. So at this moment it's not visible, but I'm really worried that it will impact us in a couple of years' time.
So from a perspective of a lawyer, I've seen less transactions in 2023 compared to previous years, especially in the first half of this year. So the year was unpredictable, and it seems that everybody was a bit nervous and postponing closing the deals. But second half was already a bit more optimistic, and last quarter of this year is getting crazy. So I think overall this year will be maybe slightly less transactions than the previous years, but not dramatically. And it goes the same for precedency transactions so far, from what I've seen. So it's not exactly what Dusan said, but it might happen, or this impact might happen in 2024 maybe, because less startups will be created, because it's much more difficult for founders to fundraise now. I've seen that investors are more picky, much more picky. They are running the numbers and trying to analyze the sustainability of the business. So that's why it's not that easy anymore for especially early stage startups to fundraise.
So it was pretty much said by my colleagues. So as I mentioned at the beginning, I'm not running a startup portfolio right now. So maybe from my point of view of the alternatives. So is that 2 years ago we investors did not have much alternatives. The risk-free interest rates were zero. And when we were striving for some interesting yield, we have to come to real estate or to private equity or to startups. Right now, the risk-free interest rates is not zero. It's 5% in the United States, 7% here in Czech Republic, and the alternatives to earn money for investors are a little bit broader than they were 2 years ago, and that's maybe the reason why the investments into startup slowed down during the last 2 years. So I think maybe it showed that the growth is not only one successful measure to invest, that you have to also earn money and to show some interesting yields to be interesting for the investors.
So we spoke about what is the current situation. Maybe we touched a little bit reasons why we are here. But the question is, when you were speaking, I have seen also in my previous experience of helping some startups to get capital. I have found out that in Czech Republic there is a great focus of business angels and venture capital on tech startups. Like nearly every company is focusing on some kind of tech, whether it's health tech, AI tech, whatever. And what about non-tech startups? And Michael, you have a lot of experience with this. Is it also the situation in the United States that most of the focus is on technology sector, and the other sectors are somehow pushed aside, or is it different?
We do have quite a few funds that are broad-based and will look at technologies outside of tech. The challenge that you have with any company is that tech has the best margins. If you're producing software, your margin can be 80-90%, and anything you go away from that, you're starting to lower your margins when you start having hardware involved. And I think for a lot of VC funds that creates a challenge across many different industries. But in the United States, we do have several funds that are solely focused on healthcare, diagnostics and devices and therapeutics. and so that makes it a little bit better for us that they can get more capital. But it is certainly more difficult to raise money in those sectors, especially in such things as like a diagnostic. Today, in the United States, raising money for a diagnostic is very, very hard. I still think that's partly the Theranos effect.
Yes, that's what I wanted to mention. Nobody believes in diagnostics.
Yeah, nobody believes in them now because of such a spectacular failure. And it's really a sad thing because we do have some amazing diagnostics, even with our own portfolio, that are very close to being able to help patients. I will say that what we have seen a big uptick in is the combination of tech and medical devices. So we have simple medical devices that can be combined with an AI algorithm to be able to produce diagnostics and treatments for people, and then that has been very popular, so those have been able to raise money. So it's definitely harder, but I think in the United States it's easier than maybe it is here in Western Eastern Europe, just in terms of there are dedicated funds there for this purpose. So it's a little bit better.
Thank you. Zuzka, your portfolio.
So basically we focus mainly on the tech startups, and the reason is quite simple. It's basically the scalability, that with the software as a service you can scale with a minimum additional costs and huge margin very fast. So basically you are betting with your fund that within the lifetime of the fund you will create enough value you will return to your investors. And this is not so easy with the, for example, hardware companies, as Michael mentioned. You need, for example, more than 10 years lifetime for your fund, but majority of the funds, especially in Czech Republic or Central Europe, have a lifetime which is shorter than 10 years, which is basically 7 up to 9 years, because no one is, from the investor's perspective, willing to just put money into the fund for example, 20 years. It's nonsense. So that's why the scalability factor, it's the main reason why everyone is focusing on the tech startups.
Yeah, we actually don't necessarily focus only on tech startups. And it's maybe, again, driven by the way how we are structured. We tend to invest into the businesses that we really have some deep sector knowledge. And for some of you who knows Rockaway, we are, digital investor, so there is always the tech component in it, but we invest into consumer businesses, we invest into retail, we invest into marketplaces. We have book publishing, we have media in our portfolio, etc. So basically many sectors that are tech enabled, but they are not, like deep tech or tech startups as such. So I think that, there are many businesses that are quite interesting and that can actually provide the return. Obviously, with the deep tech startups, you usually look at, multiples like 100 times or whatever. In the more traditional businesses, you are looking at multiples like 3 times, 5 times within the certain period of the time. So it's not that great. But on the other side, if you look at the kind of the sustainability of the portfolio, we have very little number of companies who actually don't make it through. So I would say that it's about the kind of the strategy that each company choose to go for, and it's about the kind of the sector knowledge and expertise at the end of the day. That's what matters.
Tomáš, what do you see with your clients?
Yeah, so I have a portfolio of clients that we are servicing, so not a portfolio of equity. But in the past 5 years, we've helped, I think, more than 200 companies, clients, and 98, maybe 99% of them are technology companies operating some kind of software. So that's my take. Most of them are, or a lot of them are backed by venture capital. So I think I can make this simple analysis that most of companies backed by venture capital are technology and software driven, but it's not a rule. We have also some companies that are hardware or let's say, healthcare with some hardware aspects of it, and it's backed by venture capital as well. But those are really exceptions, I would say.
Lukáš, from your perspective of private investor, how do you see the tech versus non-tech sector?
I think we investors are in many cases not very educated, and we need some buzzwords. And the tech is the interesting buzzword for now. So it's if you are investing in some exchange traded equities, then you have some kind of analysis. You have fundamental analysis. You have technical analysis. And in terms of startups, I have the feeling maybe my colleagues will disagree, but it's either the statistics. So you have to invest a lot of companies. You invest 20 companies, and 18 of them go bankrupt, and 2 of them will be the stars. So that's one way you can be a good at investing startups, or you have to have some feeling. That's not very objective measure, and that's what I think many investors or many private investors should invest into startups as an asset class via funds, via investment funds, because they have the knowledge and the know-how there. But I am pretty skeptical that if I, as a private investor with let's say 1, 2, 3 million euros, I say okay, I give 200,000 euros to 3 startups, and I will become rich. So that's I think it's not the correct way and not the successful way of investing into the startups. So I would recommend to choose some strong and reputable partner and invest rather with the fund, which have maybe the imagination and the feeling, but it has definitely the statistics. They invest tens of companies, and some of them will be or should be successful.
You remind me of 2 facts. One is that the average investment of business angel in Czech Republic is 100,000 euros. So it's around this amount. And the second is rather a joke, because as you mentioned, the buzzword, I spoke to recently to really huge institutional investor, and colleagues from this company were telling me, so there came a company, and it was like a huge but a regular company, not from the technology sector, and after the demand, they changed all their papers so that they painted themselves as a tech company. And I think this is something what Michael also mentioned, that if you add some kind of tech into whatever, it becomes more attractive for investors, because this is the fashion wave. But this is where we are now and where we are heading. What do you expect for next year? What's gonna happen? I think Tomáš already mentioned several of his ideas where we are heading with regards to the lack of investments into startups. But should it be different next year, or shall we continue with the current environment? Is there a tech bubble, or where do you see investments into startups going next year?
So I'm more hopeful for next year. I think we are going to come out of this. The money is still out there, and I think as the world and the global economy becomes clearer with a clearer picture as to where inflation is headed, that much of that capital will free up. Once we exhaust this capital, then there could be another thing in terms of raising additional capital. But right now, I think the money's out there, and it will get better next year. I definitely agree with you that adding the right buzzwords to the company can make a big difference. There are several of our companies that still have had no problem raising capital, so there are, for the right buzzwords and the right industries, the money is still there. It's everybody else that's still struggling, which I find interesting. But I do see a gradual improvement. I think the market can only hold on for so long. A venture capital fund has an investment period that they define for their investors. We are going to invest this money over this much time. And so they have to still meet that or give the capital back. And I don't think anybody's interested in giving. I've heard one fund that has started to give their capital back. But for the most part, that's the last thing a fund wants to do. So I think from that standpoint, over the next year, it's by nature, it's going to have to start picking up again. So I fully believe it will. So we're telling all of our companies, just hang on. Just don't give up. Hang on.
So basically, I would say that the next year will be very, very similar to this year, and that the valuation will not grow as it was in the year 2021. It will stay, and also like the economic outlook. Even everyone is praying that everything will get better. It will not happen that fast as we hope, and maybe we will see like some kind of improvement in 2025, but I will just follow up on what Dusan said, that we probably will see less startup at the market because there will be many founders who just didn't create their business in 2023 and 2024 because it was too risky and they rather stayed employed. But I hope that at least the founders who will take a risk will be more educated, and the probability of that startup will get funding and will be like a good startup to invest in will increase rapidly.
Yeah, so from my point of view, I think that the next upcoming years will be super strong, and I tell you why. I really believe that we are actually at the edge of the next massive tech revolution. I would even call it basically on the level of invention of microprocessors or internet itself. And that's basically driven by AI. And again, AI is a buzzword, and we kind of know it because we all started to use ChatGPT. But AI is here for a while, but AI itself, it's not that interesting. But when you actually combine it with what's actually happened in the field of robotics, autonomous driving, and electricity storage and blockchain, and actually you find the kind of the convergence between actually those four things, then we are actually talking about big stuff here. Because when you look at some simple statistics, right, if you take, for example, the autonomous driving, at this moment, it's at its beginning, but thanks to AI, we really believe that the adoption of autonomous driving will exponentially increase. And once it's actually in place, we're talking about around 88% cost reduction when it comes to the private transportation, like replacement for the taxis. We're talking 50% cost reduction when it comes to the line haul logistics, 80% reductions when it comes to last mile logistics, and 95% cost reduction when we start talking about super last mile delivered by drones. And this is just one example. If you stick with the logistics, at this moment the robots are 4 times more productive than human beings today. We expecting this to significantly increase by about 50%. This productivity will continue increasing by 50% every year from now on. So do your math, and the same thing. We're talking about the 3D printing, right? It's certain, robotics in it as well. And look at the cost reduction, right? When it comes to the prototypes, we're talking about prototype and small series production, we're talking about 80% cost reduction. When we're talking about the large series production, it's about 50% cost reduction. So it's actually massive numbers. and rockets, right? We all know the Elon Musk rockets. At this moment, we have 5,500. What's the name of this internet of his? Starlink. Yeah, 5,500 Starlink satellites there. He's expecting by 2027 have 100,000 of those satellites there. So imagine what that will do with the cost of the internet, and actually having completely, democracy when it comes to the internet connection anywhere on the planet surface, right? At this moment, I think it's about 13,000 euros or dollars to send 1 kilo of whatever to the space. He's expecting that to drop to 200 euros, right? And that's massive. So really, if you look at all those things, what AI is going to enable, we are really at the edge of something big. So I'm really staying positive. On other side, one more thing, sorry for a long speech. I think that who is going to benefit the most out of it, it's unfortunately not the small guys. It's going to be the big guys. Because what do you need to have in order to be successful with AI? You need strong vendor lock-in, because you will get the go-to market. You need proprietary data, which again the big guys has, in order to train the algorithms. And that allows you to really score big. Unlike the small guys who will struggle to really compete with the big guys or with the other startups who basically will be selling the same thing.
So
next year,
yeah. So I'm optimistic as well. And if I think if the activity on the market will be the same as this last quarter of 2023, then we'll have a record-breaking year. But I'm expecting every year to be record-breaking, so it wasn't true until this year. But I think it will be good, just based on the activity on the market and the amount of money that are invested into startups. Truth is, on the other hand, for the Czech Republic, that some funds have postponed fundraising, and some are at the beginning of the fundraising for follow-on funds. So I'm not sure if there will be enough, enough money ready from the very beginning of next year, and depends on the sentiment on the market as well. So we'll see, but I think at the end of 2024 we'll be able to say that it was record-breaking when it comes to number of transactions and activity on the market.
And do you mean also the amount of transactions or the size of the transactions, or only the number?
I don't know about the huge transactions, because it's sometimes hard to say what we are counting into the amounts. If you have one huge investment into Rohlik or product boards, then it increases the amount of investment invested into startups by 80%. So I'm not sure there'll be huge investments like this next year. But if we'll make some kind of average amounts or valuations, then I think they will be increasing for the next year. And the amount of investments into seed transactions, seed stages is increasing for the past, 4 or 5 years. It used to be several 100,000 euros, like an average investment. Now it's becoming much closer to European or Western European standards or US. So seed rounds are 1, 2, 3 million euros easy. So I think the trend will continue next year as well, and hopefully we'll get closer to European standards when it comes to valuations and amount of investments.
Łukasz, how do you see next year?
Okay, maybe one remark to what Dusan said. I don't want to argue that something big is happening, and every 10 or 20 years there should be something big which should happen. but I think it's a result of investments made in the past. So, in other words, to benefit from this revolution, you should do the investment in the past. And I am not sure that if now you get in with your money and this will happen, that you are able to benefit on that. But it's maybe the thing that what you mentioned, that the big guys who made the investment already will benefit. So I agree with you. So I wanted to argue, but now I came to the conclusion that I agree with you, and that the big guys will benefit on that. So thank you very much.
Well, to be honest to you, I think it's that this technology is actually open to everyone, not just to the big guys, right? And that's something what actually have changed in last 6, 8, 9 months. The AI and the tools related to it are right now open to public. Anyone can actually take them, anyone can feed them with the proprietary data, anyone can train his own vertical algorithm or proprietary algorithm, and anyone can enhance his product with it. And that's basically what I'm talking about. And it doesn't matter what you do, right? It doesn't matter if you are a call center and you are in the business process outsourcing business. Essentially, at this moment, you can go and fire all your people and replace it with automated solution. And that solution can be completely proprietary to you, trained based on the data of your clients, as long as you get actually the consent to use that proprietary data for the training, and you can actually completely transform your business. So my point is that all the B2B companies or B2B SaaS companies that are doing business based on their own proprietary solution, they can actually transform the business and make it more AI enabled.
Again, just two ideas came to my mind when we were speaking. When we were speaking about the Skylink, I was like, I would really invest into something that would collect the trash from the orbit. Because if you imagine the number of the objects out there, it will be huge. And second, as you mentioned, the big guys, I think that not many people know, but there's an initiative called Open Finance. And that's actually some kind of initiative which on the European level, which has an aim to open the conservative, like all the banks and financial institutions, data to not only general public, but also to the biggest guys. And then you can imagine what you can do if you were like Google or somebody, and gaining like also all of the personal data in addition to what you have, like it will be really huge. So we will see. But getting to the last point, because we have 3 more minutes, what would you do if you were a founder? If you did everything right, you have a really nice pitch desk, and you are contacting investors, and your calculations are right, and your valuations are right, and you did all those things that are usually being provided by mentors and by some like business people, and you need some kind of capital to grow. What would you do as a founder?
So the first thing I would say is that in the market out there is still a lot of money in the economy. There's a lot of people who've done well. So I believe going after the angel investors. If VCs aren't investing right now. But of course, for many companies, they need more capital than what angels can provide. And what I tell all of our companies is it's all about credibility and building your credibility. If you want to raise money, you have to figure out how to make yourself credible to investors. So it's not enough for you to have the best idea. You need to be able to show them that it's particular to you and the reason that you should be able to make this company successful. And so finding ways, whatever that is, through having revenue, having customers, having a prototype, having data, whatever it is, you need to find a way to prove to them that you are the company that can make this work in that industry. And I think credibility is the one word that I try to pound into our entrepreneurs, is that that's what you have to be able to make it happen.
I would add on this, I would definitely train the communication skills, at least if you are a founder from the Central Europe and Southeastern Europe region, because that's what we see that most of the founders are struggling with. And basically, what we also see is that founders are kind of missing the vision or the strategy which they can present to the investors and distinguish themselves from other startups. Because like you can have like the best product or best tech software you created, but if you can't sell it to the investor, no one would just invest into your idea.
Just adding on top of what has been said already, I would say that the founders need to learn how to bootstrap. Because if they can actually run the company in the bootstrap way, that's the way how they actually gain a lot of not just experience, but a lot of respect from us as the investors.
Yeah, I like that. And also a point of Zuzka about the sales. We are really like Czech founders are great at building tech products. They are technically capable, but they are really bad or usually bad at sales. So I would recommend them to work on that. But it's an advice that I don't know how to work on sales because we don't have enough experienced salesmen that would train a new generation of salesmen. So that's one advice that is not really helpful, but that's important.
So I think sales and vision are very much important, but from point of view of an investor, I think the founder should focus on numbers as well. And he should be able to show to the investors what's the goal, what's his goal, and what are the financial terms of the goal. And if I have faced a lot of a couple of investments in my life, startup investments, and what I was missing, that the founders were not able to show the potential financial outcome of their investments. So maybe to hire a good CFO, which will put the ideas into the Excel spreadsheet.
Thanks to all the panelists. I think at the end it was not too gloomy. I think it was really positive on the situation is not that bad and there is something you can do in order to find investments for your good ideas. Thanks very much to Michael, Zuzana, Dusan, Tomáš and Lukáš. Thank you very much.
And thank you, Jana, for hosting this. And finally, I could have a break. So thank you for that as well. And we are entering the final stage of European Finance Investment Summit. But we still have some agenda ahead of us now. And we have one keynote and final panel discussion. So now I invite Jiří Švejcar to deliver us a speech about winners and losers in the race for innovation. Here we go. You can take the mic, yeah, and the floor is yours.
Thank you. Good evening, ladies and gentlemen. My name is Jirka Švejcar. I'm partner at Prague office of Boston Consulting Group, or as we call it, BCG. I am speaker number 13, so all of you really deserve an award for persistence, perseverance, and even a grit, I would say. Before we get to content, just maybe a quick scan of the audience. Before we spoke about the difference between financial institutions and fintechs, so let me just understand, if you could show hands, who is part of the fintech ecosystem? So on the fintech side, investment side, who of you is the fintechs? Can you just show hands, please? Fintechs. 1, 2, not many. Okay. who is on a bank side, financial institution side, working with banks and doing that. Another 2, 3, 5, 6, okay. So, but the rest of you, I'm a bit wondering now, what's your take on tonight? So I hope there will be some interesting lessons for you as well. So, looking at the content, we at BCG are taking, I would say, almost a scientific approach to innovation. We measure innovation since 2005 in our most innovative companies in the world. By index, we have interviewed and got responses from close to 40,000 executives globally around the whole planet, and also across about 20 industries. And also we are measuring innovation by really scanning how well it's integrated into a company, how frequently they are offering new services and products, how they work with it, how well they manage innovation as a process. And we have normalized this on a scale, and that's the chart on the right. It's, we call it innovation to impact, so it's kind of a normalized view on the companies. So taking into account all these impacts, we are really able to identify the innovative companies in the world. And the companies we scan represent about $5.5 trillion in turnover, which is roughly 6% of world economy. So quite a broad view. Now, you can really see that there is an impact of innovation. So the companies we identify as the most innovative ones have a much higher return to shareholders compared to the others. Now, we monitor this year by year, and of course this is an effect which multiplies itself, so it gets better and better like this every investment. But on average, it's about 3.3% higher return to shareholders for the companies that really do well innovation compared to those who don't. So when you are thinking about your investments, really do think and pick companies that are innovative. And we do this study every year, so it can be a useful guide for you and for your pension perhaps. So with that, let us look at the 2023 edition of the most innovative companies out there. And I think you know probably 90 to 100% of the logos on the slide. I'm not going to cover all of them, but you can see some really, I would say, well-known companies: Apple, Tesla, Amazon, Alphabet, Google, Microsoft, Moderna, and so forth. These are the companies that really are able to translate innovation into systematic effort and activity that also brings them value and that differentiates them from the rest. Now, because we are in Europe and because we are talking about financial institutions, I have added these little boxes. So by blue, and there are 11 blue boxes, those are the companies that have headquarters in Europe. So this is our home turf, so to say. And then in green, we have the financial institutions. Now, as you probably noted, there is only one green box, and that's Stripe, as the e-commerce payment infrastructure in the US. And we have 11 European companies. Might be good, might be bad, but what is really interesting is to look at the trend. So on the left side, we see how many European companies are in top 10 or top 20 most innovative companies. And you can see that this is gradually declining. So we as Europe are losing it. We are losing it to US, we are losing it to China. It sounds a bit like Donald Trump, I realize, but actually this data really shows that it is happening, right? So that's one, and the other, when you look at the financial institutions, they are losing it as well. So this is the intersection of the worst possible situation. We are in a continent that doesn't really know how to do innovation right. We are in, or most, or some of us are at least, in an industry which is not really very innovative. We have marked the financial institutions that were able to stay for a few years in the rank. That was HSBC and JP Morgan Chase, but even they disappeared, and now it's only Stripe holding the banners. And Stripe is actually interesting because that's the only fintech that made the list, that made the top 50. So maybe you are thinking, well, okay, so if not the big companies and not the big bucks, maybe the answer is the fintechs, right? So let us look at the fintechs. Maybe not. Right. So on the left, you see number of fintechs founded globally. We are running a database for many years where we have all the fintechs from all the industries. I mean, in fintech there is often also regtech and insurtech, so this is purely fintech. And again, you can see the trend is quite clear. It's going dramatically down. So there are not so many fintechs happening in the world anymore. Fintech is not such a cool thing anymore. And you can think, why? Maybe they are running out of topics actually, because the blockchain was exploited. It's now a regular thing, also for the established players. So what is it? Why they are not so interesting anymore? When we zoom in Czech Republic, you have a slightly different view. I'm showing how many millions of dollars are invested in individual years. Also, the trend is going sharply down. And then we listed some notable fintechs that were founded in those years. Of course, it does not correlate because majority of investments are actually second or third series of investments. But you can kind of see that there is still some innovation happening, but not for so much money, and definitely not globally. So this is pretty murky picture. And you might ask, what to do about it? Like, are we at the right stage, actually? And we think there are two areas where really difference can be still made, and you heard about this from many speakers today. So one is the climate and sustainability topic. Czech Republic alone has to invest about 1.2 billion Czech crowns by 2030. And these are extra investments that really go into the climate sustainability, basically decarbonization. And we have the structure, we have 4 reports about it. If you are interested, you can find it and download and read it. And there is very clear kind of investments that need to be made. And from this 1.2 trillion, 1.2 trillion, 900 billion has to be invested by companies. And these companies need to be financed. Because even if you are getting the money from the state, and actually we have a lot of money, over 100 billion from EU, and so we can finance mostly by EU money. You need to finance at least the short term before the investment comes due. So that's definitely an area where fintechs can really be adding a lot of impact and a lot of value. And then the second area is artificial intelligence. And we just listed the use cases that banks are looking at and what it is that artificial intelligence can bring you. We don't have time to go through all those use cases, and I think they are pretty obvious, but you can really do a difference in how you work with customers, how you work with the risk profile, how you sell, how you deliver the messages, and so on. So that's something that banks are not so fast and not so good at. If there are fintechs looking into this, they can definitely bring value and then combine this with the banks. So this is the fintech world. There is still opportunities out there. And then maybe coming back to the big established players. These are globally valid ways how to amplify your return on innovation investments. Now, when you quickly read through it, you see that it's all about improving the way innovations are managed in the company, but the sad truth is that Czech banks, at least as I come to know them, are actually treating innovations not as a core part of its business, but it's typically, let's find someone who I will call Mr. Innovation, we throw at them a few $1 million, we say find some fintechs, buy them, and let's see what happens. Lemonero is Komerční banka, Energo CSOB, and so on. This is good, but this is not the innovation as we know it. This is not what will make you stand out of the crowd. This is not what will really make a difference. Innovation needs to be much more ingrained in the culture and the processes in what is being done. So refurbishing your front ends is not an innovation. So there is a tremendous opportunity for Czech banks to further, distinguish themselves and improve, top up their game in innovation if they do it right. Thank you very much.
Thank you. Thank you a lot. That was Jiří Švejcar, partner and associate director at the Boston Consulting Group. And now we are entering the final panel discussion, which will kind of conclude this whole day. Therefore, I invite the topic of the panel discussion. No, we have another keynote? Okay. Oh yeah, we have another keynote speech, I'm sorry. A lot of agenda, a lot of time passed. So, for the next keynote speech, I invite Michal Nový, project manager at Peakplan. Welcome. Mic is yours, and this as well, and you have 10 minutes. Thank you.
Dobrý den, já vás tady vítám, děkuju všem, co jste tady, já udělám trošku změnu. Uděláme to v češtině. For the English, please, after the presentation, you can discuss it with me, the topics of the presentation. So, the keynote of the presentation is this. So, ten topik té prezentace toho Peakplanu, my jako Peakplan řešíme komerční fotovoltaiky, řešíme komerční řešení, čili vlastní energetické řešení, řešíme nějakou efektivní investici do té fotovoltaiky, která je velmi atraktivní, je to velmi aktuální téma. Já jsem si tady pro vás připravil nějaký body prezentace, které jsou aktuální, čili projedeme nějaké portfolio, aktuality, legislativu, tu ekonomiku, vlastně ta investice jako takové. My jako Peakplan se zabýváme vlastně analýzou a nějakou realizací těch projektů jako takových, čili zvyšujeme tu efektivitu, pomáháme vlastně od A až po Z investorům či instalačním firmám zprocesovat ten projekt do zdárného konce pomocí našich technik, pomocí projektů, správného energy managementu a tak dále. Čili jsme ten partner pro nějaké poradenství, podporu a tak dále. Máme svoje vlastní plánování, řízení toho projektu, spojení vlastně s našimi instalačními partnery a tak dále. Co vidíme jako důležité, je ten chytrý energy management, ke kterému se dostaneme. My řešíme v podstatě instalace nad 100 kW píků, čili řešíme firmy, řešíme investory a řešíme větší komerční stavby. Tady nějaké portfolio, co je naším cílem, můžeme vlastně vyřešit od začátku až do konce, celostátní síť nějakých partnerů a tak dále. Samozřejmě doklademe důraz na nějaké snížení emisí a tak dále, snížení hlavně fixních nákladů. Co se týká nějakých aktualit, tak aktuální podíl těch obnovitelných zdrojů v České republice je nějakých 18%. Do roku 2030 to má být 30%, hlavní tahon by měla být fotovoltaika. Takže za nás vlastně budoucnost a kombinace fotovoltaiky a toho jádra je nějaké gro. Myslím si, že je to velmi atraktivní téma. Ty plány těch investic a dotačních titulů jsou tam v podstatě velmi řádově v nějakých miliardách, čili 500 miliard a 300 miliard nějakých průmyslů. Za nás vidíme velkou vizi v obchodních centrech, čili tam jsou velmi atraktivní modely, kdy ta fotovoltaika dává velký smysl. Mají přijít nějaké nové dotační tituly po novém roce, kdy vlastně se to otevře firmám, otevře se to velkým instalacím. Spousta změn je tam v legislativě. Jak vidíte, za rok 2020 bylo připojeno 289 MW, za rok 2023 jenom vlastně první pololetí bylo připojeno nějakých 487, čili ten náskok a skok je tam opravdu veliký. Ten solární boom, který přišel právě v tom roku 2020 díky nějaké energetické krizi a tak dále, co jsme tady měli, tak se překlenul na tu rezidenční formu, čili na té rodinné baráky, které většinou byly do nějakých 10 kW. A aktuálně se to překlápí ekonomicky a vlastně i tou poptávkou do nějakých firm a do nějakých subjektů a investorů, kteří mají obrovskou spotřebu, mají nějaké haly, mají nějakou výrobu, infrastrukturu a tam samozřejmě řeší obrovské náklady a řešení, jak optimalizovat ty náklady. A tam vidíme velký potenciál, kde v podstatě ušetřit spoustu peněz z těch fixních nákladů. Takže ty firmy jsou opravdu za nás velké řešení. A jak jsem již zmínil, spousta instalací těch komerčních, budeme svojit těch komerčních, čili těch velkých, tak bylo zvykem v České republice instalovat fotovoltaiky bez nějakého úložiště, bez baterek. A tady vidíte nějaký graf, který vlastně disponuje číslami a hodnoty, kdy v podstatě ta ekonomika toho projektu s bateriemi, ze střídači a vlastně v ten moment, kdy to jde do sítě, tak vidíme tam v podstatě nějaký peak shaving, čili ta bateriová úložiště u těch komerčních elektráren, ta akumulace je opravdu výhodná v podstatě v těch dotačních titulech, které teď vypisují, tak ta akumulace je opravdu velmi výhodná. Jsou tam dobré podmínky pro ty investory, čili velmi velký počet instalací předtím, bavíme se o roku 2010-2012, tak byly samozřejmě bezbateriového úložiště. Teď se to tak překlápí a v podstatě vidíme v tom velký potenciál, kdy tlačíme na to a snažíme se těm podnikům říkat, stavte tu elektrárnu tak, aby to pokrylo tu vaší spotřebu. A samozřejmě je velmi těžké tam říkat tomu investorovi, nakolik si vlastně on cení tu soběstačnost toho projektu a vůbec toho objektu jako takového, snížení těch fixních nákladů. A to samozřejmě je velmi těžké nějakým způsobem vyčíslit, ale opravdu ten energy management je číslo 1, to znamená, kolik je reálná spotřeba, kolik je využití, čili i ty distributoři tlačí na to, aby v podstatě ta spotřeba šla přímo do toho objektu a nešlo to ven, čili do toho distribučního sféra. Čili ty objekty dimenzujeme tak, aby ta firma se pokryla co nejvíc svých vlastně nákladů, dimenzovala tam nějakým bateriovým úložištěm, která je schopná fungovat i na spotu, schopná je fungovat samozřejmě na nějaký přeprodej, ale ta soběstačnost, to je to slovo, které je velmi důležité. Když se budeme bavit o nějakých číslech, nějaké megawattové elektrárny, tak se tam bavíme o nějakých investičních nákladech, o nějakém dotačním fondu, o nějaké výrobě té energie, potom nějaké tržby. A samozřejmě teď se dostáváme do bodu, kdy v podstatě můžeme stavět třeba megawattovou elektrárnu, ale spotřebu máme třeba jenom poloviční. Čili daleko větší potenciál je v tom, abychom postavili poloviční elektrárnu, pokryli si svoje náklady, snížili tím i výdaje a v podstatě eliminovali ten přetok do té sítě. Protože ty distributoři v podstatě teď už zamítají rezervované výkony. Je časté, že si podáte žádost na rezervační výkon a na megawattovou elektrárnu a přijde vám, že v podstatě můžete použít jenom 200 kW a bez přetoku. Čili jasně vám dají najevo, že s tou energií v podstatě nemáte vlastně co dělat a ani oni. Jo? Takže to je vlastně ten fakt. Důležité faktory v tom managementu, jak už jsem již zmínil. Samozřejmě pokud chceme fungovat na spotu, prodej těch přetoků, to už jsme si řekli, za mě úplně zásadní a za nás snížení těch fixních nákladů a ta soběstačnost, nakolik si toto ceníme. Efektivita je aktuálně v té spotřebě uvnitř toho objektu, čili pokrýt si ty fixní náklady a uvnitř toho objektu fungovat. A nejvyšší úsporu máme v momentě, kdy samozřejmě minimalizujeme tu spotřebu z té distribuční soustavy. Čili my jsme jako P-Plan, ta divize, schopni tohoto všechno vám odřídit od začátku až do konce, čili od prvního momentu a nápadu až po tu finální realizaci. Jsme vám schopni pomoct s vyřízením projektů, všech legislativních norem, které se samozřejmě velmi mění. V druhém kvartálu v příštím roce, v roce 2024, se to bude zase měnit. Například uvedl jsem tady příklad Penny, tak samozřejmě ten obchod snížil vlastně spotřebu svojí distribuční soustavy na těch obchodech, které má, o 40%. To jsou samozřejmě ohromná čísla, která ušetří díky tomu, že do toho budou investovat. Takže ty návratnosti jsou tam tudíž velmi lukrativní. Tady samozřejmě můžeme uvést, jak může vypadat nějaký projekt té fotovoltaiky, které máme za sebou. A pokud samozřejmě budete někdo, kdo by měl zájem o nějakou hlubší diskuzi, tak prosím přijďte za námi, určitě se o tom popovídáme a budu se na to těšit, vidíme to jako velký potenciál, je to velmi aktuální téma, které řešíme, řeší to investoři, řeší to instalační firmy a vidíme v tom velký potenciál a umíme vám to zastřešit vlastně od A až po Z. Čili dávat té investice velký smysl a to tady nebylo, bylo tady v podstatě investiční sféra, že ten investor má nějaké peníze, vidí v tom nějakou návratnost, ale ta realita je trošku jinde, takže my se snažíme opravdu to dimenzovat na ten projekt a zefektivnit vlastně tu investici jako takovou. Takže za mě všechno, děkuji vám za pozornost, díky všem, co tady byli a užijte si ještě krásný večer a děkuji moc. Díky za pozornost.
That was Michal Nový from Peak Plan, and now we are truly entering the final phase of the event. I hope so. I will check. Yes, it is like I said. And I now invite for the final panel discussion speakers Michal Pražný, Vice President of Sales and Business Development of Global Payment Europe, Miroslav Jaso, Head of IT Regional Card Processing Center, and Peter Stražovec, co-founder of Payout. The topic of this panel will be future of payment technologies in Europe. So, gentlemen, please take a seat. I will give you the second mic, and feel free to drink water. It's important to stay healthy and fit and refreshed. So, okay, I will just find my questions related to this topic. Okay, I hope you have enjoyed this event so far and this afternoon. And it's my great pleasure that we can sit here like that and close the whole event with topic of payment technologies, because it's also something that is connected to many previous topics that we mentioned: banking, fintech, AI, etc., etc. So maybe it will be kind of a wrap-up session. So let's see. But my first question will be kind of extraordinary, because I would like to ask you about cash, which is one of the oldest payment systems in the world. And why I'm asking about cash is that, we have already seen in some countries these movements that try to protect cash payments. In some countries, they even want to make it a constitutional right. And also in Czech Republic, after cancelling the EET, we have also seen that a lot of, for example, pubs or restaurants stopped receiving card payments and are accepting only cash. So is this something that will be important in the future, and that it will affect the future of payment technologies, or is it just only maybe some people that are refusing to change and learn the new ways?
So generally, just from statistical point of view, the cashless payment are growing, and by the way, cash is also growing, but a little bit slower. So it means that the cash is still used by the people because of these different reasons. Somebody would like to use cash. This is also country by country. So for example, in the Nordic countries, the cash is more or less going out, and if you pay by cash in Norway, you are either a privacy guy or some illegal guy. On the other hand, the Germans are very much like cash. So generally, the cash is still here. Of course, somebody can have cash connected with the shadow economy, so no tax. On the other hand, there is still a group of people which have to use the cash because of some reason. So generally, cash is here. Of course, it's not the most innovative or fancy method of payment, but it's still here. And we, like Global Payment, we are from history connected with cash ATMs and so on. So what we currently see as a trend in the cash is that is really, let's say, considered by the bank like something like for some kind of people, or even some public right or constitutional right to have it. However, now the cash handling, the driver here is like effectiveness. So it's really to serve to even the share. You can see in multiple countries that the banks are working together to create a shared network of the cash. The first reason is to decrease the cost, so really to be responsible. So this is the ESG, this is the E. Also the second is that the rest ATMs which are removed are put to some location where it doesn't make sense for one bank to provide the ATM. However, it's still needed for some people, so some banks are also using it for the C, which is a social. So because of their responsibility, they, let's say, provide the ATMs there. So the answer from my point of view is the cash still will be here. And of course, it's also our task, or the people who provide the innovation stuff, to provide something which is more convenient, cheaper, and available to replace the cash.
Thank you.
I agree and disagree with you, Mika. The thing that cash is here because of easy of use and usability, it's true. But it's not because how cash is usable, but it's because how the other means are not usable. And I think that we are experiencing very exponential digitization all around. And that the other means of payments, other than cash, are more usable. We can see it on far ends, on economies in Africa, where they are paying with either mobile payments or some paying with crypto payments, because it's much more usable for them in a given moment than cash. And I'm not now talking towards shadow economies or fraudulent funds, just the usability fact. And I am a believer of that cash will more or less disappear for our day-to-day life. It will still be available, but also that most probably in another form, like your ATMs. If we will have a digital currency, like central bank digital currency, and the ATM will print a voucher from my wallet, from my digital currency, it will be something like a cash, but it would be representing some total different currency and different operations as now. So I think that it will be some marginal use, but very soon we will get rid of cash in day-to-day life.
Thank you. I believe in choice. So whoever wants to pay with cash, be my guest. Of course, there are, as you mentioned, there are really cases where cash is needed or is more practical. But taking my example, I'm from Slovakia, so we are using euro. I am now in Prague, in Czech Republic. I do not have a single Czech crown with me. I didn't need a single Czech crown with me over the last days. So when I paid with card, with mobile. So everything I had to pay for, including hotel, transportation, everything could be paid by something else than cash. But still, as I said, be my guest. If you want to pay with cash, please, let's go on. This is not competing, it is complementing to each other.
I get it. And I generally, I really agree. So you should visit Nusla. Most of pubs in Nusla don't accept cards. So I hope you are not staying in a hotel in Nusla. That's where I live, for example. But moving on, throughout the whole afternoon we are talking about the future, about innovations, about maybe some predictions and prognosis for the next year. So of course I have to ask you as well, regarding the payment technologies, what are the next trends? What is the big thing in payment technologies for the next year? How do you see it?
So we still see, and now I'm talking mostly about the retail payment, so how the customers can pay for the goods, whatever it is. So we'll still see that, at least in our region, the most is done by cards. And I think the big advantage of the card, or I think big synergy with the card, was Apple Pay and Google Pay, which really, let's say, boost the card payment. So we see it like that. On the other hand, we are definitely looking for the options, and we believe that the option is first in alternative payment methods, which can be, for example, account-to-account payments, or some cryptocurrencies and so on, whatever store account and so on. So this is the one direction, to offer some alternative. The second, of course, is to, let's say, make the payment even more easy, which is, of course, sometimes I hear it's quite difficult to find something better than Apple Pay for the in-store payment. Where we see innovation is also to integrate the payment, so in the payment integration. It doesn't matter if it is integration to different mobile applications. So currently each retailer has own loyalty app, and so to add the payment to this app is just the next logical step. Another one can be to use the payment, for example, in the transportation or in the automotive. There is big belief in the EV charging, to somehow connect the EV cars with the payment, so to make it easy. So I think these are, let's say, also important stuff, so to find another let's say usage, and to really fully integrate and improve the user experience, to really have all-in-one. And I think this is the way for the fintechs, for retailers, and even for banks.
I am a big believer of embedded payments, embedded into everything and with all the feature set, not just payments. It's, here, if we are talking about Europe, I think that very soon, hopefully thanks to our regulator, we will see more payment process flows and financial services included in our operations. Following on Michal's example of Apple Pay and Google Pay. Here in the wallet, my phone, I can have cards and slightly nothing more, maybe some loyalty cards, etc. In the United States, I can have their PayPal, other wallets, I can have their buy now, pay later solutions, and this will come here also. So instantly when I will be paying, I can lend the money, I can insure the money, and this can be done via big techs, via the wallet providers like Apple and Google, thanks to integrations, but also directly on the side of the merchants with embedded payments during the checkout, during the B2B payments. Everything could be done automatically and transparently. Not only the payment itself, sending and receiving money, but also extending the amount of money with lending, insuring it, additional services. And it should happen fully transparently. So we will do the business, not care about the money flow and these different services, how to change them.
Thank you very much. So I'm an IT guy, so I will speak from an IT perspective, offering a little different insight and continue what you said, Peter. So there are several or many apps that we will use, and even more in the future. To be able to use those apps in a seamless way, we as a consumers, those apps need to be interconnected somehow. And exactly the interconnection is what I like to speak about, and it's the technology. So it's technologies, and today it was all on technologies, and how to achieve those interconnect within or between the applications, and of course with the financial institution that is providing those services. I would say the big thing is Open API or REST APIs, and of course data streaming. Both have different uses, different advantages, disadvantages, but still those technologies will enable us to use those many apps to the point that is convenient for the consumer.
Thank you for that. Maybe I will ask you something related to this topic as well, because one of the, of course, future trends is related to everything is related to AI now, as we have heard from the previous speakers, and also we were talking about AI during our fireside chat. We have about implementation of AI into financial departments, which of course is connected to payment technologies as well. So how would you think the implementation of AI would change, and in what ways it would change the payment technologies in the future, or could it change, or should it change? So what's your opinion?
In my view, it will probably not completely change it, but it will improve it in several areas. So one thing which came to my mind is definitely fraud. So with the AI, the way how the fraudulent behavior is detected, and to make the payment safe and convenient, this is where I see the AI and the fraud system are going by this way for a few years already. Of course, the next one is to as we discussed, that the future of payment is to combine the payments with other functionalities, so to really use the AI to, for example, optimize the payment flow and offer me the best way of the payment and best experience. So this is where I see it. And also the payment itself can be integrated into the AI. So if now the banks are moving to the channels, communication channels with the customers, not only banks but also retailers, so the payment can become to be fully integrated, which means that AI should be also able to authentify me. So then I can make the payment even more easy than this mentioned, for example, Apple Pay.
If I may, I will have now two hats. One will be as the provider and one as the customer. For providers, either payment institution or banks, AI will be not good at all. Why? Because all what Michal said is true. The thing is that us implementing AI on the provider side, we need not just an AI, we need some privacy-preserving AI deployed on our or on some controlled premises. We will need to wait for AI Act. We will need regulatory interference with how we use AI, etc., etc. The bad guys, they are using AI. They are using AI to do fraud to us, to do social engineering to our employees, our clients. They are using AI in many ways, and they don't care about regulation, obviously. So they will make our hearts tough. As a customer, customers will greatly benefit with AI. They will use whatever GPTs to cruise our offers, to compare each of one, to not abuse, to use the system at the most best for them, for their benefit, to get cheaper service, to be one step ahead of our sales teams. And again, unless we will implement the same power, they will get positive advantage. So I think AI will first looking good, but it will make our lives tougher because us implementing it, because of regulatory and other aspects, will be slower compared to the other side.
Thank you. From my side, I agree with predictive analysis is definitely the benefit that will be there and can be implemented, as Michal said, in many different ways. Still, I would maybe argue with the point of AI, artificial intelligence. I believe we are not yet there. The maturity is still very low, and if we would discuss whether these AI models we are using are really artificial intelligence, I would say no, by far not. So we need to go there. So really to reap the benefits of artificial intelligence, this is year ahead, or years ahead. So I still agree with the point, predictive analysis, having big data tuned by the predictive model that we are using, or types of predictive models we are using, this is excellent, definitely. I agree with what was said, comparing different things, excellent again. So not a big revolution yet, as we need to gain maturity, but still definitely good use cases for the consumer in the end.
Before I ask another question, I again invite you to ask your questions from the audience to our speakers via Slido. So if you want to ask anything, just write it there, and at the end of the panel, we should look at those questions. You previously mentioned a couple of times Google Pay or Apple Pay. Of course, these tools or mobile payments are on the rise. I started using maybe a year ago. Before that, I refused it for a long time, and now I use it all the time, every single day. And I suppose that more and more people will use mobile payments. However, Apple and Google are not financial institutions. However, they are still processing a tremendous amounts of money via these mobile payments. So, are there any risks for these tech giants to act instead of these, let's say, traditional financial institutions providing the let's say payment processing and payments? Are there any risks, and what we should be worried about?
So it's important to say, and it was also mentioned, that, for example, US is different than here. Here the Apple Google Pay is more or less the technology. In US there is definitely much more behind. So first, important to say that on this example, Xpace, even Garmin Pay and others, it shows how important is the user experience, because until, let's say, Apple stepped in, the traction was very low. Today we have this Xpace, it's sometimes 45% in the big retail, it's 45% done by this tokenized card. So this is, let's say, it shows that easy to use is a key. What is also important, that there is additional payment to Apple, so the bank must pay. So again, it shows that if it's something very, very customer friendly, so then the bank has no choice and prefer really to spend much more money on it just because the customer wants it. And if it is competitive advantage or service to the customer, doesn't matter, but it shows this. What is the risk? And I don't know if this is probably not the risk for Apple and Google, this is more opportunity, but the risk is for banks is that they are losing the connection with the customer, at least in the payments. Of course, they can have otherwise. But if you as a bank provide Apple, Google, or Garmin Pay, so your client gets to you more than knows, and Apple, Google knows much more about his behavior than you know. So on one hand, you have to provide it, it's good, But on the other hand, I think it's a big risk, and this is also the reason why banks should think about the changing, because they have to be in closer touch with the customer and with the retailer, which is difficult with these, let's say, companies behind.
I believe that even before Google and Apple, as Amazon did do Amazon Pay for their reasons, Alibaba, they did Alipay, and they could ask any bank to cooperate. But those banks just haven't been enough flexible with their technology, their businesses. And also here, the scale of technology in Google and at Apple is tremendous. I believe Apple is also regulated for several financial services, and they are just running their run. They don't care, and they wouldn't come to a bank and discuss it. So they provide the technology, they provide tokenization, they cooperate with banks, and it's on us, on providers of either banking or financial services, to cooperate or to catch up. And we can discuss how it's possible or not possible to catch up, but they are here to stay, and they have miles ahead with technology, and they are using it for their good, and hopefully also for the broader customer good. So they are here to stay, the risks are there, but again, as outlined earlier by myself and discussed, they are regulated from any perspective. They provide some services in US, some here, some in Asia, so regulatory is here to take care, and they will run fast.
Thank you. Again, from the technical point of view, tokenization is adding an additional layer of security. So paying this tokenized transaction is even more secure than without. So recognizing that, our bank group, of course, developed an own RightPay system. So we are going the direction. I agree, we can fight or we can adapt. So we choose to adapt. So therefore I say let's use it at best from our bank, of course, or bank group, because it adds additional security for the consumer, and of course adds then more customer experience. I use it myself, it's like that, I'm done, nothing to do, I don't have to search for my card, I don't have to do any other steps, I just pay. This is what I expect from as customer experience by paying. So let's go that way.
Thank you for that. Now I will go back to the presentation by Boston Consulting Group, where we saw the dramatic decline in newly established fintechs in the world. There are various reasons, of course. We also talked about regulation, especially in the EU. So, but what do you see? What is your point of view about establishing a new, let's say, payment processing fintechs or startups related to these services in the European Union? Is there any space on the market left for some new guys, or is it so difficult and so expensive that the struggle is not worth it?
I would say the answers are yes. So there is enough space and there is a lot of struggles with it. We understand that, let's say, not only big financial institutions are important, like banks, but also the fintechs. So we are talking to fintechs, and only during last 1 year, we talk with like close to 20 fintechs which are interested in the payments. In the payments, like in the retail payments and so on. So there is definitely demand. On the other hand, it's really, let's say, important. The market is very competitive. The prices are for the commodity is quite low. So the way for fintech is really to combine. To have something, either financial product or investment product or loyalty models, and just to add the payment. So this is what we see from the most of the, let's say, cases. This is the case. To really create the completely new payment only proposition is difficult. And when I, for example, take the example of the PSD2, which the PSD2 was invented or intended to support these fintechs for the payment. The current situation is that the way how it's implemented, it's mandated, but it's implemented in the way that fintechs, in fact, cannot effectively use it in the retail. So, and this is what we see there can be a change. Yeah? It can be much more friendly for the fintechs in next years.
I did co-found a regulated payment platform a couple of years back, and I will do it gladly again, as we see in SME sector where we are looking, 70% of the payment automation is still out there, done manually or semi-manually, and there is a huge waste of space for automation. But true, as Michal said, promises of open banking are not here yet. We did segue around it, but it required additional regulations, additional licenses, where the market entry barrier is huge. You pay on that couple of millions to get several regulatory requirements met and being a regulated entity, and this is unlike other businesses which are not that heavily regulated. Also, it's total different scale of the business if we are talking about something that's regulated in EU or in US or in other territories, compared to SAS, for example, being able to distribute globally. We see the graph or the investments, but it correlates somehow with investments in other services too. If we skip outliers like AI or similar thing or IoT, then many others correlate similarly, maybe not having this strong peak as fintech had, but I think there is a waste space, maybe not necessarily for fintech. We will need to distinguish between regulated and non-regulated. If we go towards non-regulated, it will be more platform providers, tools providers, tokenization providers, whatever. There is a lot of space, I think, and we will see it growing. Maybe we will just see more mature type of companies growing, because in our company we see so many opportunities, we just don't have enough time and resources to chase them all.
Thank you. So now I have two heads that will be speaking. So the first is from the past, and when I was head of IT of the biggest retail chain in Slovakia, there we searched for new opportunities. We searched for cooperation with fintechs, because what we have seen from the banks was not good enough for us. On the other hand, I've seen how much time it takes, we are discussing years, and how much money and energy and knowledge from the retailers it takes to be able to cooperate with fintechs. And now the other head, now I'm the head of IT of RBC, that is a company that is doing exactly payment transactions for the whole Raiffeisen group, and I see how difficult and complex this infrastructure and this whole environment is. Now I understand why it was so difficult in the past to get a good cooperation with fintechs. So having said that, yes, there is definitely room and space, and some revolution might really bring the added benefit for the customers. For the time being, I see as a complex ecosystem, it's not that easy to offer that kind of extra services for the consumers, for the customers to justify the extra time and money that is needed.
I see. Since we are talking specifically about the situation in EU, we definitely should talk also about some success stories and also maybe some stories that didn't end up that well. And I'm speaking, for example, the Czech company Twisto, which is definitely, let's say, a success story in the fintech related companies, especially for Czech Republic, which is not that great in startups in general. On the other hand, we also had a case of Wirecard in Germany that, well, turned out pretty badly. Even despite the fact that the German market is heavily regulated, and still this company made it to the top. I believe it was like one of the 50 biggest companies in EU at one point, or something like that. So, what will future bring? Will we see more Wirecard stories or more Twisto stories?
Yeah, Wirecard. It was an exception because it was fraud, and now I'm talking also as a shareholder of Wirecard. So it's like sad story from both perspectives. But on the other hand, as you said, it was interesting because the Germans were so proud of the Wirecard because they understood that they can do Siemens, the trains and so on, but now they have a fintech, so maybe this is why Buffin and other regulators just closed the eyes and let them, but it was just a fraud. But I think we see some kind of big fintechs, and I would say maybe two examples. ADM, this is the payment provider which really, let's say, works. There are some, but generally the proposition was that it works internationally, have a consolidation, support multiple payment methods. There is easy integration. So I think this is, for example, why they convince a lot of customers, not because of price, but because of these values. And the second, which I would mention, is Revolut, which is, everybody knows it, but it's still interesting how many years Revolut is still, let's say, the example, the way how to go. And we had also some discussion with our customers how to improve the payment, how to do the digital payment and so on. And they again mentioned during last 2 months again Revolut. So this is still there. So I think this is quite interesting to see how the fintech let's say can grow and how the fintech can show.
I don't know how many stupid jokes we can make, but I would really love to have Mr. Marszalek from Wirecard here and Mr. Schmida from Twisto and compare like who considers what success story.
That could be really interesting discussion. So the organizers, please take notes, and for next year we definitely have an interesting panel attendees.
Not sure if we will get Mr. Marszalek on phone, but anyway, like from jokes aside, Wirecard was a huge artificial success, made from this artificial part right, but from the regulatory part totally wrong. And I always chase the idea or the question, how much regulatory interferes for good and how much to harm the industry as a whole. Because it could be, when not supporting Wirecard that much, especially in Germany, and there were several similar payment processors, maybe they could grow better. But back to the question of if you will see things coming out either startups or companies, there will be huge growth. There is continuous evolution. It's different, but we see dinosaurs in the sense of, for example, PayPal changing, growing, scaling up, now bringing new things. We see very nice technologies coming out, like the whole blockchain, and it's overlapped with payments, finance, and then distribution into other industries also. And small to bigger companies utilizing either technology for the good or them changing how finance is operated. So I'm very optimistic. I think there is a very optimistic outreach that we will see some very bright stars coming out, even though it's tough. In the regulated environment, it's tough. But looking towards left and right, meaning US and Asia, we will see different scenarios. And just coming back to this regulatory aspect, because I'm always considered like either you are against regulatory or negative. No, I'm very positive towards regulatory. And an example is, for example, Brazilian National Bank, where there is, not sure how many you know, there is a payment institute, PixPay, in Brazil, which is kind of open banking on steroids, functional, used by more than 50% of the nation, being issued by National Bank in 2019. So yeah, you can do these things even from the regulatory perspective, from small company disruptive perspectives, and even from companies, as mentioned, who are on the market. So I think there is a waste area for innovation, and we will see.
Thank you, but not much what to add and what to say. But in one of the previous presentations, it was shown the decline of the numbers of new fintechs. I believe that speaks for itself. So when the numbers speak on a decline, then the chances for really big successes is declining as well. Of course, as I said, that's why I mentioned the revolution. If there will be some really a big step, a change like PayPal at some time was really, that is a good example, or Revolut, really good. If we go that way, then definitely I see the positive outlook. But at the moment, seeing the decline in numbers itself, I see it rather not that positive.
Thank you. Now it's time for the questions from the audience, if there are any. I still have some left on my side, so let's see if ask anything? No. That's fine. I still have some questions left. While speaking about Twisto was one of the first companies, maybe the first one, that introduced the buy now, pay later solution to the customers. I think that in Czech Republic it was the first one, probably, I don't know, or maybe the first one that was like widely used and known. These kind of solutions are also on the rise when it comes to demand. So is this something that will change the customer behavior? Are we going to see more and more buy now, pay later solutions in EU? Especially also it is connected with how high inflation, the prices are rising. So a lot of households found themselves in the last couple of years in a situation when this was probably maybe the only solution for purchasing some goods. So is this the way how could the retail work in the future? And also thinking about the fact that the financial literacy is very, very, very at a low level in Czech Republic, which also is connected with the financial planning. And from my point of view, these solutions could be very dangerous in the hands of customers that are not financially, let's say, that they don't have financial education at all.
From customer proposition point of view, we see the financing as one of the leading propositions or reasons to change or to extend the portfolio. And doesn't matter if it is for a client or if it is for the SMEs. Yeah? So the easy approach to money, to credits, to buy now, pay later, SME loans, lending, whatever. In fact, this is still the same, only with different model and different name. So we see it like this is something what is on track. Yeah? So if it is good or bad depends, in my view, on the institution which is behind, on the intention which is behind. So in some cases it can be reasonable, it can be, I would say, responsible lending, really willing to provide easy access to the money for the SMEs or to help people which are in some kinds of crisis or need to have money. So that can be it can be quite beneficial to provide, let's say, quick access to some installments or buy now, pay later if I am really in some critical situation. But of course, that can be, let's say, some institutions or objects which are willing to misuse the situation. And I think it's, of course, on the regulation, but also it's a kind of responsibility of the players, banks, providers, or whoever is there, let's say, to also have such a responsibility and reduce these negative cases.
I'm afraid there is nobody to impose this responsibility, but we shall see. Because if you are asking if it will grow, like we people, we are easily getting used to good things. Like we enjoy them, we benefit from them, and it's very near to having, like now during a payment, person can be identified, verified, checked, background check, source of funds, everything is done on background automatically. So obviously, the system, the merchant and the underneath payment system can identify if the person needs money, if it's safe to lend money, if it's not safe, for how much it is safe to lend money, and it can happen all automatically. So I'm afraid we will see this rising. And what it will bring, that's the other topic, because if we give easy access to money to places where they shouldn't be, for example, our kids doing fast fashion shopping, or our wives, or even not sexism, men. The point is that if this will be transparent and easy, then how to and who to control it? Not sure how many of you gamble, but if you are depositing to an online casino, you cannot deposit from a credit card. You cannot do it from a loan in most of the countries. And there is a term called responsible gaming, where the regulator is not only checking if you can deposit because of sanctions or others, but if it's responsible for you to play, if you're not addicted, if your pattern is not addicted, and maybe something similar will be implemented into responsible shopping, responsible restaurant visiting, drink, but all this will be, the access to money, including lending, will become much, much, much easier. Even with technology, if you will have proper blockchain underneath a digital euro, it will be maybe implementing peer-to-peer lending or other ways, so it will be easy to lend. But then, yes, responsible lending, shopping, and other aspects need to be in place. I don't think NGOs or banks or us payment institutions or whoever will impose it, so let's see what government will do, but we will be having easier access to it, then it might be restricted.
Thank you.
Thank you. So what speaks for the increase is really user experience. It's easy to do very fastly and on the fly with the same application. So this is definitely speaking for Arise. What is speaking against Arise is that this is really not a new concept. It is here under other names for many long years. So I believe even we as customers are already knowing what's going on, that we are really lending money or spending money that we do not possess. On the other hand, it's convenient, and this is exactly the point. When it is convenient, let's do it. Of course, the brain later then, tells me that it was maybe not a good idea, but the point that it was so easy and seamless, I believe will play here a role. Thanks.
Thank you all, gentlemen, and with these final thoughts, we conclude today's final discussion and also the whole event. So thank you again. Miroslav Jaso, Michal Pražný a Peter Stražovec. Thank you. And for all of you that stayed until the end, I see that there's not many of you, but still, thank you very much for attending and for participating in this amazing event. As I mentioned at the beginning, we saw and heard like 3 welcome speeches, 7 keynote speeches, 4 panel discussions, and 1 fireside chat. Altogether, it was between 25 to 30 speakers, so a lot. I hope that you learned something new about whether it is about banking, finance, or new trends in blockchain, payment solutions, or of course the bank innovations. So thank you again for attending this summit, and I hope we will see each other again somewhere, sometimes, or maybe at the after party. So thank you again, and on behalf of all the organizers, thank you, and let's see each other again some next time.